Order, order. Welcome to the Public Accounts Committee on Thursday the 12th of June 2025. The wealthiest in this country contribute significant amounts of tax revenue to the Exchequer, and 119 billion in personal tax was collected from around 850,000 wealthy individuals. However, the increased complexity of their tax affairs makes it more difficult to get their taxes right and can present opportunities to deliberately not pay enough. Although there have been significant increases in the amount of tax collected from HMRC's compliance activity in recent years, this suggests that levels of non-compliance of wealthy individuals could be much higher than originally thought, and I'm sure we will come to that later in the hearing. Across the autumn of 24 budget and spring statement in 2025, the government is committed to scaling up of compliance activities and granted additional funding to tackle serious offshore non-compliance, including fraud by wealthy customers. So, this morning we'll be examining HMRC's knowledge about the tax contribution from wealthy taxpayers, as well as exploring HMRC's understanding of the risks associated with its approach to tackling non-compliance. We will also be examining HMRC's performance in increasing the tax collected that is owed from wealthy individuals. So, to help us with all that quite technical stuff, we're very pleased to welcome the new Permanent Secretary and Chief Executive, John Paul Marks. You're very welcome to this committee. I'm sure you will be making many appearances in the future. But you've been in the role only since April 25, having previously been Permanent Secretary to the Scottish Government, where you were responsible for the development and implementation and communication of government policies and was the Principal Accounting Officer there. Angela MacDonald is a regular attender at this committee, Deputy Chief Executive and Second Permanent Secretary. Angela's been in the role, as we all know, since August 2020, having worked in civil service since 2009 and moving to HMRC in 2017 and becoming Director General for Customer Services then. Penny Chinovich, I always stumble on this, but you've been to the committee many times, but have I got it right this time? Thank you. Director General of Customer Compliance. Penny has been in the role since 2017 and was previously Chief Executive of the Valuation Office Agency from 2009 to 2017. So you're at the front end of all of this. And finally, but by no means least, Jonathan Atho, Director General of Customer Strategy and Tax Design. Jonathan was the Department Chief Economist at HMRC and has also spent 14 years working in HM Treasury and joined the ONS in 2015 and was the Deputy National Statistician and Director General of Economic Statistics before joining HMRC in 2021. And on my left, Philippa Madeline, Director for Wealthy and Middle-Sized Businesses Compliance. Philippa has been in her current role since December 22, before which she was operational and technical teams in counter avoidance. Philippa has spent her career to date in HMRC, joining as a graduate in 2007, and has worked on a range of tax operational policy roles. Particularly, as I've said, warm welcome to John Paul and Philippa. I believe it is your first time, yes. So welcome. So, let's go into the main session, and I would like to just talk about, and John Paul, thank you very much for your letter to the committee about a fishing incident, which I think was a serious incident, your letter of the 10th of June. I think what is interesting is whether this information was known when your predecessor appeared before this committee before. And I think the thrust of my interest in this matter is that I only discovered about it when I read reports of the Treasury Select Committee, having discovered about it from the press. And I think what we really want to encourage in this committee is openness, candour and transparency from you. If there is a sort of similar incident in the future, I would be most grateful if you could let us know. And there is another channel for letting us know. I've been on this committee for 13 years on and off. Nothing has ever leaked when it's marked in confidence. So I'm always happy to receive something in confidence if necessary, and you can remain assured it will remain in confidence unless, of course, we discuss, that you and I, the sender and recipient, that it shouldn't remain in confidence. So I think what I'm asking for you is candour and openness, and let us know in future. But David, Chief Treasury Officer of Accounts, did you want to say a word on this?
Yes, thank you, Chair. So if I just explain for the committee and and the views, the requirements of managing public money in this area. There are three bits, but sort of cutting to the chase. Managing public money sets a firm presumption and expectation that serious losses are notified to Parliament. However, managing public money deliberately does not define what a serious loss is, because that will be very fact-specific, both the nature of the organisation, the activities it undertakes, and the volume. So for an organisation like HMRC, which is literally collecting hundreds of billions of pounds worth of tax revenue every year, dealing with tens of millions of customers, its threshold for materiality will be substantially different from an organisation like the Treasury, which is a much smaller budget, doesn't deal directly with customers, and therefore less susceptible to fraud. So it is, as always, for the accounting officers to take that judgment on what is appropriate to notify, and where necessary to come and explain that to you.
John Paul, I'm going to come to you in a minute, but I just only would say with this relation to this particular incident, a large number of taxpayers were affected in a significant way, and that's why I think the press were attracted to the incident. And if it's likely to attract significant press interest, it means it is of interest. And I think in openness and candour, a simple letter to me, apart from anything else, it'll cover you, because if I've had a letter, I shan't be necessarily needing to raise it in the committee in this way. But you might want to come back.
Just a few points, Chair. First of all, good morning to the committee. I look forward to working with you in the years ahead. And to reassure you on openness, candour and transparency, 100% I agree with you. We welcome your scrutiny, and that's my total commitment to those principles and how we work together. As you say, I wrote to you earlier this week on this incident, which, as you say, was serious and, unacceptable loss of 49 million to the Exchequer, affecting 100,000 of our customers, which is about 0.2% of the PAYE caseload. And as the Treasury Officer of Accounts says, given we collect over £840 billion a year, the judgment on materiality is different for HMRC perhaps than other government departments, but nonetheless I agree with the point with regards to disclosure, and I will do that in my annual report, which I will publish next month for the first time. So that is again properly done according to the rules under public money. The final thing really to say, I do regret if there has been any frustration in terms of our handling of this. That was not our intent at all. My intent was to provide some verbal evidence last week and then respond to questions I've written to yourself and the Chair of the Treasury Select Committee, and I'll respond to the correspondence I've also received this week with more detail. I welcome your point with regards the opportunity to have in private briefings. The level of security threats is significant and constant. The team detected and disrupted this one well. There was a criminal investigation, and in private hearing, I'm happy to bring, the head of the Fraud Investigation Service, my Chief Security Officer, to explain more about some of that detail, but also the threat environment and the way in which we are ensuring HMRC is secure now and secure for the future as well.
That's a very helpful and candid and opening remarks. This committee is acutely interested in cyber attacks on everywhere in the government sector. We had a separate hearing on this. We are concerned about where departments have legacy systems that are maybe more open to cyber attacks. So I think it is a subject we will return to, and no doubt you will want to pay very close attention to that too. We all know yours, Marks and Spencer's, the British Library, how very disruptive to customers, particularly, these sorts of attacks can be. So thank you very much for those opening remarks. I think we will move on now, please, to I think we've Nesel Calliscan, and we've warned you about top of the session about your Treasury Minute response to our recommendations on call waiting times. You have been warned. Good. Nesel Calliscan, please.
Thank you very much, Chair, and thank you to panel members for joining the session. Just as some background for context, members of the committee and panel members will recall that in the Public Accounts Committee in January 2025, the report on HMRC's customer service accounts the committee concluded that there were some issues with the telephone services and that HMRC did not give enough consideration to the needs of customers. It was a constant feature that members spoke about. Of course, taxpayers are customers for HMRC, but they have no choice as to where they can take their business, so to speak. So their engagement with HMRC is not a normal customer provider engagement. There were issues around the number of individuals that could access someone to speak to at the other end of the phone. So only just over 66% of customers spoke to somebody against a target of 85%. I want to ask why HMRC is still not willing to commit to an average waiting time target for customers' phone calls.
So I agree with your, fundamental principles that we're a customer service organisation. People need to be able to talk to us multi-channel, and our telephony service needs to be there for everyone who needs it. We are committed to delivering our service standards. It's important that we do. And I'm confident in the year ahead we're going to continue to see that improvement compared to last year, and we're focused on that. Your specific point on speed of answer, I had a look at the data for last week and last month. Much better compared to last year. We're at about 11 minutes last week, 13 minutes last month. We'll publish all of that data shortly too. And average speed of answer is a key indicator for us. And I agree with you, it needs to be, and we look at it all the time. Ultimately, percentage of calls answered at around 85% equates to around 10 minutes average speed of answer. And certainly in my time working in DWP, that would be the point at which you'd often see people disconnect and give up and phone back again. Obviously, you don't want that for their experience, but also in terms of failure demand, it's not efficient. So we have that lead indicator of 85% customer service standard for percentage calls answered or advisor attempts handled, and that equates to that key indicator on time of speed of answer. And our objective is to be at 85% or better, and that should be at about 10 minutes speed of answer.
What is the percentage at the moment then? Because
Angela might have the latest. In March 25 we were at 80.2. I think we're going to be better in April again, and I'm hoping for this financial year, across the year, we will hit the standard, but Angela can give you the very latest.
I've got the data, if that would be useful. Yeah, okay, so we hit 83.6 in April. That compared to 53.5 the prior year. We hit 84.6 in May. That compared to 60.4 the prior year.
And in terms of the average waiting times, I think, John Paul, you referred to a 10-minute wait. Therefore, it's been an improvement because the average call waiting times when we spoke at the committee previously was a 23-minute wait.
It was, absolutely. So the overall result for our 24-25 figures, so for the entire of the year, will be 18 minutes 38. But actually for the March it was 14:44, April it was 13:31, May it was 12:45. So
do you have a target then? You're just not willing to say it publicly?
I think the key thing, so we absolutely have an internal expectation of what we are aiming for, and we track it. So when we are having our very regular performance reviews, all of this data, so the satisfaction with the calls, how many customers get through to speak to somebody, how long they're waiting, those are all data that we internally monitor very, very actively. There are so many targets, if you think about these as published targets, there are so many targets we could choose to have, which of the many. But our average speed to answer is tracked internally, it's externally published, we actively monitor it, we do take it very seriously.
Okay. Just very, very briefly, I'll just say this, the speed in which a phone call is answered is very, very important, and I think there was a strong sense from this committee that it was an important target, particularly because there was the case that after 60 minutes, over 40,000 people had been cut off, and I think it was just in an 11-month period. I'm actually unclear if that's still the case. I think that still does happen, which is a real concern.
Well, if perhaps I might share. So you made a number of excellent recommendations when we were last before you, the majority of which actually we were very pleased to agree to. So accurate call waiting times for customers waiting in the queues, avoid completely the cutting off a callback service, having the resourcing and the funding to be able to hit our targets. So only a few weeks ago, we put out into the market a procurement for a complete replacement to our telephony platform, demonstrating a multi-million-pound commitment to the telephony being a key part of our channel mix. That will solve those problems. So it will give us the technology to remove completely the 70-minute cut-off, which is a part of a system limitation that we have at the moment. So that will remove that completely. It will also enable us to be able to, in real time, be telling customers where they are in the queue, how long they are waiting. So those recommendations it's about ensuring we've got the capability to do that, and as I say, procurement to be able to enable us to sort that out.
Well, I'm pleased to hear that, because of all the things that we heard, that was the one I think members were most exercised about. It's one thing having to wait more than half an hour online on the phone, but actually then being cut off after you've spent an hour is quite
we agree.
poor customer service. So I'm pleased that there has been some movement in what it sounds like will be some change. And then very finally, we heard from HMRC that one of the challenges with speaking to customers is the security of being able to exchange communication and customers being able to send you documents, for example. We didn't understand why it is the case that the NHS, for example, can do it and HMRC couldn't. Do you have any, just in the brief time we have, any updates or key milestones you can indicate to the committee?
Absolutely. So we absolutely want to be in a situation where we can stop the letter exchange with customers and move into a secure communications environment. The challenge is that email, the standard email, is not a secure environment. I refer to the earlier conversation which we were having with the chair. So a secure environment to do that is absolutely vital. We have, in the last number of months, done some testing. There are many IT platforms out there that do this kind of thing, and we've done some testing on what our requirements would be, how it would work exactly. And we were very pleased yesterday to receive in the spending review the funding which will allow us to procure that platform and allow us to then be able to roll that out across, starting with compliance, because this is one of the areas where actually the exchange of some quite large-scale documentation is a very big feature of many compliance activity, but then rolling that out across customer services. So now that we, after yesterday, know that we have the funding for that, we will go now ahead to procure. We have been working in preparation. The procurement will come out very shortly, and then we will roll that out across the IT estate, across the entire of our services through the SR period.
Thank you very much. I'm glad that the spending review was a positive outcome from HMRC, and we'll be watching tightly the procurement process so that can be swiftly implemented. Thank you, Chair.
Yep. So thank you, Nesl. I mean, just to say I totally agree with the thrust of Nesl's questions. Let me put this concept to you. Any organisation, I think, is better with satisfied customers than dissatisfied customers.
We agree.
And I think no more so than HMRC, because if they're satisfied, then they will be much easier to deal with in the future. Just finally, Angela, on this, can you give us any idea of time scale? You're going to procure this, you've got to procure it, you've got to test it, you've got to get it into operation. What's a realistic timetable for getting it into operation?
So I think being realistic, given these are really very, very large procurements, and you understand, Chair, the steps we must go through in government procurement. It's likely to be into 26-27 when actually we get our first pieces in. However, as I say, we have been getting on doing some testing actually in Penny's area. So we are working currently with Treasury and the Cabinet Office to see across all of our procurement processes just how can we accelerate procurement. Government procurement has many steps. Can we move in a productive and agile way to get through these things a lot faster? We're getting fantastic cooperation from our colleagues in other government departments. This is key for us, and we are pressing very hard. The Minister is very, very supportive, so we are doing everything we can. But being realistic, this is big change. It's going to be next year, but it is, as I say, now we have the funding, full steam ahead.
I understand that, and thank you for those very candid answers. We now come to the bulk of the report, the subject that we're here to discuss today, payment of tax by wealthy individuals. And to start us off, Oliver Ryan, please.
Thank you, Chair. Morning.
Morning.
So 850,000 people earning more than £200,000 a year, or assets of more than £2 million a year in this country, a figure that has grown considerably, but as has non-compliance. I understand the net tax take from non-compliance has gone up 21% between 21 and 23, as well as the tax gap number of 1.9 billion. So what are your ambitions and priorities for ensuring wealthy individuals pay all the taxes that they should, given that my constituents, it just gets taken out of the pay packet and it's not an option for them?
Yeah, thank you very much. So firstly, I just want to thank the NAO for the report. I think, Chair, you made the point around contributing to our knowledge of the subject and the model and the approach. There's been a lot of collaboration with the team. We've accepted the recommendations and we look forward to implementing all of them. In terms of the opportunity, I think it's significant, and I would probably summarise it as capacity and capability. So in terms of capacity, Philippa runs a team of around 1,000 civil servants, and we have secured the funding to increase that by another 400. So we've scored at least an additional £500 million worth of yield as a result of that. So more capacity for Penny and Philippa to undertake more activity. At the same time, we want to ensure that the team have the enablers that they need and the capabilities to be more effective and more productive in their work. So things like data exchange, targeting and risking, opportunities for us to collaborate globally with jurisdictions to ensure that we are operating offshore to the best effect, but also looking at opportunities around policy change that will also help us close that tax gap. The team will say a bit more. We're doing things like recruiting and bringing in external specialists. We are going to be investing in compliance tools, and on the policy side, looking at things like crypto asset reporting frameworks and making sure that we are getting all the information in that we can. So the data-led compliance model that is so important to being effective here is delivering the results that your constituents are looking for.
Thank you for that answer. This is probably a question for Philippa, if I can. There's mention of your kind of strategic ambitions for the wealthy customer group and how you will tackle some of the issues around connected entities, companies and trusts, etc. I think it's just been mentioned by John Paul about the kind of global world, about crypto, about this kind of ever more complex world that we live in. It seems really vital, but also on the other side really basic. When do you think you'll set out a timetable for kind of trying to create a body of work around how we're going to tackle some of those areas?
In terms of a timetable, what's been really important in recent years is what JP referred to in terms of the international data exchange. So compared to sort of 10 years ago, we now receive a lot of information on people's financial accounts offshore, but also entities that they control through the Common Reporting Standard and other data exchanges. As JP mentioned, we continue to work internationally to get more of that data, and that will include crypto asset reporting, but that doesn't come till about 2027. And then more recently, we've had things like the Register of Overseas Entities, which gives us more information on what trusts people might own offshore. So alongside that data, what we always do is upfront education to try and encourage people to either amend their returns or tell us about tax they should have paid. And then once we get that data, we're able to target effectively our compliance efforts and then report back on how well we've used that data in due course. And so really that data and compliance effort and policy change goes hand in hand, and you'll see that in our increased results over the last few years.
So is it that it's a kind of constant endeavour as opposed to something you can set a timescale to? Because I'm kind of cautious that, as I say, we've got these strategic ambitions, which are all very kind of noble and I agree with, but what's the deadline for achieving those?
I think it's a good question. I think that it is a constant endeavour because ultimately those that are deliberately going to try and evade tax will continue to try and do so. But our job is to work internationally to increase that data exchange so that increasingly there are fewer places for people to hide their assets, that we are able to then find those identifying factors, whether that's a big balance offshore that they might not have told us about, or whether that's a company that they're not reporting income from, and then use our investigative experts to help get that money in. And so then we are transparent about how that reflects both in compliance yield results, but also through the tax gap that we publish. So in terms of targeting that, we've obviously said at high level that we want to bring in an extra $6.5 billion in the scorecard period to close the tax gap overall, but we've committed to bring in at least an extra $500 million from wealthy offshore risks in the next 3 or 4 years.
Thank you. I'll move on then, if I can. Sorry. Go
Can I
on.
just come in, Oliver? And firstly, I should declare draw attention to my register of members' interests of the assets that I own. So I need to do that. On your register of overseas entities, as I understand it, this comes into operation in April this year, and only Gibraltar has so far actually filed such a register. Is that correct?
So we actually started getting Register of Overseas Entities data at the end of January 2023. And we do get that from a number of jurisdictions, but it is highly dependent on what central register each jurisdiction holds in terms of what we get in terms of reporting. When we don't get that automatically, we also are able to make requests where we might suspect that someone has filed an incorrect return or not told us about something. And so we also do outbound requests to get data if it doesn't come to us automatically. So it does vary per jurisdiction depending on their own approach, but we have had data from over 40 jurisdictions since the 31st of January 2023, and we use that in our compliance efforts today.
How many more are you chasing?
In terms of jurisdictions?
Yes.
So at the moment in the Common Reporting Standard, we've got over 100 jurisdictions. In that, we've got all the kind of major global financial centres, but there will still be people that aren't in there. So we've got people like Trinidad and Tobago or the US Virgin Islands, for example, that aren't in there, but all the global financial centres are in the Common Reporting Standard. And then the Register of Overseas Entities is a slightly smaller subset of that, but again, we've targeted that on the major financial centres.
So, data. You mentioned this international collaboration. You have agreements with 93, is it?
Over 100 now, I think.
It's over 100. So you're actually slightly preempting my question. Given there's probably about 180 countries in the world, what are you doing to increase it still further?
So what we do is work with the OECD and we look at the geographical reach. As I said, we've got all the global financial centres, the major ones, but the OECD then have a special forum where they look at whether there are other jurisdictions that might be of interest that we need to then work with and put them onto the list. And so it's done on an analysis, not just on geography, but also the scope of the reporting itself. And that forum decides, do we actually need to bring that jurisdiction in now because we're seeing a lot of people setting up accounts there, for example.
That's very helpful to have that all on the record. Oliver, I'm sorry I interrupted you.
No, thank you, Chair. So I'll just move on. This is probably also to Philippa. You talk about the work that you do with wealthy individuals, and that kind of £2 million of assets, or people earning £200,000 a year or more. The sort of headroom above that can be quite varied and huge. You don't segment your work in a way that corresponds with some of those kind of wealth levels, if you like. Do you feel like you need to do more of that, and would doing more of that help you understand how people are evading some of this, given that, as has been said, the wealthier the individuals are, the higher the risk, if you like, and the more likely they are to try and not comply?
So we do segment our approach and we do look at wealth, but it's not the only indicator of risk. We also look at complexity and opportunity because, of course, wealthy individuals do have greater access to, for example, tax advisors who might help them with their planning. What we've done over the years is, historically, we had an ultra-high net worth unit which only focused on wealth, and we found that actually meant that we were missing other risks that might present themselves because wealth alone is not the only indicator. So over time, we've then built the Wealthy Operational Unit that sits in my area, and that allows us to look across a number of risks. Because, for example, you could have a billionaire who actually could have quite boring tax affairs and report everything that they owe, but then you could have a millionaire or someone that sits beneath that who has set up really complex offshore trusts and structures. And so we found that actually taking that segmented approach is better to help us identify risk. And for the most complex and riskiest of our individuals that owe UK tax and our wealthy population, we deploy customer compliance managers who have a more in-depth understanding of those that we feel pose the greatest risk to the tax system.
So it's not, you say it's not necessarily done on wealth, it's on the basis of risk. So this is, for example, when you allocate customer compliance managers, there's a reason why only half of them of a certain figure have these, because of the sort of risk as opposed to the wealth.
Yes, well, it's both. Wealth will continue to be an indicator, but risk as well.
How can you kind of, because I'm never keen on people sort of saying the system is now set up and it's kind of working. When you say, what's your kind of ambition for improving that?
Absolutely, we're not complacent, and our ambitions are undimmed there. We talked about the enhanced data exchange, which has been transformational in us being able to understand the types of risks we might see offshore, but we continue to work on that. And then JP already mentioned the kind of capacity and capability that we mentioned. So through the spending review investments and other investment that we've talked about, we will have more people, which is important, both investing in our existing workforce to give them the skills and capability they need, but also trying to bring in more wealth management experts, for example, to help us understand beyond tax how people do their wealth planning. But from a system perspective, it's really important for us with that vast amount of data that we get to make sure that we're able to link that data effectively, target and pinpoint our compliance activity, and then make sure we are as productive as possible in that work. As you can imagine, some of the really complex arrangements that we see, we get vast amounts of data or information on from customers. And so being able to better mine that to find out where we need to focus our efforts will be a key part of this investment.
Great, thank you.
Yeah, thank you very much, Oliver. Lloyd.
Thank you, Chair, and good morning, Philippa. A quick opening question. Exactly how many billionaires currently pay tax in the UK?
So we do not hold a list of the billionaires because, as I just explained, we do not look at wealth alone. But what we do is we do publish official statistics on the top income taxpayers and capital gains taxpayers. So you'll be able to find that on gov.uk. But we don't sort of segment according to how many billionaires are there that pay UK tax. We just look at the UK taxpaying population overall.
So you're saying the reason why you don't know how many billionaires pay tax in the United Kingdom, it's not because of it's either because of a lack of information or because you actually only look at it on a specific case-by-case basis?
Yes, we look at the amounts of UK tax income and gains that are owed, because there is not a current requirement in UK tax law to report your total wealth. It is only when you have UK income that is taxable, and also on chargeable events like when you sell an asset. So we don't collate based on wealth data alone because that's not a current requirement, and so it's not the data that we collect.
But do you think it's effective to pick and choose which taxpayers you take a closer look at, those super rich taxpayers, rather than to do it by bulk and to look at every single one and all of the data that's collected? So why are you doing it in that sort of ad hoc way where you only go at certain cases?
So we actually risk assess all of the wealthy population, and then we segment it according to those that pose the most risk. So we have a risk-based approach to the majority of those, and then we have our customer compliance managers for those that, through that risk process, we identify to pose the greatest risk in terms of complexity or opportunity. So we do look at all, and then we hone in and segment, and we deploy our most senior tax professional to those that we believe need that.
Just because you said then you do risk assess everyone.
Yes.
So going back to my first question, if you risk assess everyone, could you tell us how many billionaires there are paying tax in the United Kingdom?
We do not risk assess according to wealth. So we risk assess according to chargeability to UK taxation, which will be on income and gains.
Just touching on the points that my colleague Oliver mentioned, do you not think it would be helpful to have some sort of segmentation? So when we look at the very wealthiest, because there is a broad spectrum of those high net worth, those wealthy individuals, between those earning several £100,000 a year to billionaires and multi-billionaires. So do you not accept that perhaps if you can sort of risk assess everyone, it'd be useful to be able to segment to see exactly how many billionaires are paying or not paying tax in the United Kingdom?
So I'll hand over to Penny in a second because I think she wants to come in. But as I say, we do risk assess and segment them all, but not according to wealth at this stage. Penny?
Yeah, so our risk assessment is using multiple data sources. Philippa has described some of the range of data that we have available. It is significant. It's a data-based risk segmentation. Pure wealth is not the only is not the only factor in that risk assessment. As we've talked about, it's opportunity. But also we have to use the data that really relates to the responsibilities that we have, which are, the taxable assets and the taxable events that relate to UK taxation.
Just out of interest, both Penny and Philippa, could you, if you wanted to, find out the answer to that question internally, how many billionaires pay tax currently in the United Kingdom, or are you not able to do so?
I don't think it's a question that we seek to answer, because we're looking not at the total wealth of an individual, but at the wealth in the relation to the taxable events that relate
I
to the UK
understand that, but I'd just like
system.
to know if HMRC has the resource and the ability to find out how many billionaires are or are not paying tax in the United Kingdom.
So
whether or not you sort of choose or seek to do so, are you able to?
I mean, we collect the data that is needed to administer the tax system as is, and there is no tax on wealth. There is tax on certain transactions. So when those transactions happen, if you dispose...
I very much don't want to get into tax policy. As the chair will rightly say, that is not the work of this committee. It's just whether or not HMRC has the resource and the tools to do so.
We only have the data that is needed to administer the tax system, and as there is no tax on overall wealth, that information will not be routinely collected.
So just to conclude, you don't really know how many billionaires pay tax in the UK?
So we again, because the way we operate the tax system, whether you're a billionaire or not does not determine whether you pay income tax. It's the income tax and the chargeable gains that determine whether you pay that tax, and that's what we administer.
So just to help both of you in this dialogue, I gather that the Sunday Times Rich List 2025 listed 156 billionaires compared with 165 last year. The steepest drop in the list is 37-year history. So that gives us a clue roughly how many billionaires there are in this country. Whether they all are qualifying for tax or not, I don't know. But it's not a terribly difficult piece of computation to look at that and just see who is paying tax. And as it says, I was looking for the reference, I can't find it. But somewhere in the NAA reports, even one case of getting the tax right for these billionaires can absolutely change the dial on how much tax the wealthy pay. I just wonder whether you could pay a little bit more attention to this.
As I said, we will look at a number of different, as Penny and Philippa have said, we will look at a number of factors in terms of identifying risk. There is a wide variety of data available to us from third parties and elsewhere. But the key issue, again, is sort of if I was to look at that rich list, somebody will have had to make a judgment about whether these people are tax resident, about the value of their assets.
I think that the chair makes a really important point. Has HMRC ever tried to link the Sunday Times Rich List with your own tax records to estimate just how many billionaires listed on that list actually are resident or tax resident here in the UK? Has that work ever been completed?
I wouldn't want to get drawn on any specific data that would be used, but we will use a variety of third-party data to make certain we are aiming our efforts as effectively as possible on those to make certain we have.
And is that third-party data collected in bulk? Do you analyse all of it, or do you just do it on an ad hoc basis?
I'm happy to come in there. So we use a variety of data, including open source data that would be publicly available. We would clash that with third-party data. So we've already talked a little bit about what we get from offshore, but of course we also get data from UK financial institutions. We work closely with Companies House. We work closely with the Insolvency Service, and we work closely with others, including land registry information, and of course we get a lot of information and data sent to us through things like stamp duty, land tax returns and our self-assessment returns. So we use a huge combination of data, both third party, open source, and the information that customers give us.
That's reassuring to hear. I mean, my understanding is that in the United States they do allow academic researchers to make that link between tax records and also the Forbes 400 list, which I suppose is their equivalent of the Sunday Times Rich List. So would you allow HMRC to do a similar thing where actually they are working with academics and others to do that linking up work?
Yeah, so we do run a data lab and we do allow people access to our data for research purposes, and that does allow them, if they have other data that they wish to bring in to match to our data, we would allow that. So in theory, if people had other information that was, and they wanted to use that to do analysis, that is open to academics to come in and do further research on the data we hold. We obviously wouldn't allow any data out that would be identifiable for any taxpayers, so there is a lot of protections around that, but we do allow researchers in to look at a particular number of different issues. I know, for example, there's been research reports recently on some of the aspects of non-dom policy, those sorts of things. So this is an area where high income or high net worth individuals are a focus of some of our research reports. So that is open for researchers to come in and to do academic research using our data in our secure data lab environment.
Thank you, Jonathan. Just before we move on, just one final question then, and I think I probably know the answer, but does HMRC know, either internally and are they willing to publish it if they do, how much tax billionaires did pay to HMRC in the previous financial year? Do you have that information, or do you not think it's worth having if you don't?
We do not collate it in that way, and as I said before, simply being a billionaire does not necessarily mean you are chargeable to UK tax. Particularly before this year when the non-dom changes came in, a large number of billionaires may be non-domiciled in the UK and have no charge to taxation here unless...
Now that change to the non-dom tax regime has been made,
yep.
Do you not think it would be valuable for HMRC to know how many billionaires are paying tax in the UK and how many did pay tax in the UK in the last financial year? Now that, if you generate your wealth here, if you do your business here, if you're resident here, if you're tax resident here, we should probably know how much tax you're paying as one of the wealthiest individuals in the country.
Absolutely, and we can look at the points you made on research because, we are always happy, as Jonathan said, to look at research and compare that with what we need to know. I just wouldn't want to get overly focused on billionaires alone because actually we see a lot of risk at lower wealth bands, not just from billionaires.
So just on the non-dom point though, because I think to reassure you, we will start receiving the data in the beginning of 2027 tax returns with regards to change to non-dom rules and publish the formal evaluation thereafter. So your point of to what extent we'll be able to evaluate and transparently explain the effects. The OBR have scored their assumptions, but we will of course evaluate that carefully and then make it available.
I suppose going on the point that you just made, Philip, about expanding our view from not just billionaires but to the very wealthy in general, is there anything stopping HMRC from publishing the total amount of tax paid by the very wealthiest in this country? Like you said, you don't segment it, but you must have an idea of what the very wealthy are paying as a whole. Is there anything stopping you from publishing that?
Because we know how many people on PAYE, for instance, don't we?
So I think the problem is our information on wealth is going to be incomplete. So if somebody has had a transaction recently, they've sold a property recently, we will have that information. But if they have not traded anything recently, we will not have an up-to-date valuation for that asset. So we do not have, because, and again, we cannot have, because we do not have the tax policy structured in that way, a total view of somebody's wealth. We will have estimates, we will have information on what recent transactions may have arisen, but that idea we will have a total view of somebody's wealth is not necessarily true. We will have what we know, what we have as information, and also, as Philippa said, what we have as third-party information.
I suppose perhaps JP would be useful for you to come in here as a new chief executive of HMRC. As my colleague Nessa has just pointed out, we know how much tax is collected through PAYE, which is what the majority of our constituents pay their tax every month. Do you understand that? Actually, if we were to publish more information about the total tax paid by the very wealthiest in this country, that would create much more transparency and much more public confidence in HMRC, so people actually felt that taxes were being collected fairly and that you were doing your job effectively. And that the answer that we can publish it for one but not the other because it's not complete is particularly galling for many taxpayers.
Look, I mean, this underlying conversation shows there's more to do, and the NAO report talks about us making sure we're reviewing our population definitions, giving how that's changing, and there is a recommendation about greater transparency with regard to the amount of tax that wealthy taxpayers pay and the contributions of different segments within it. And we've committed to looking at that recommendation and coming forward with a more comprehensive response of how we will respond. I'm with you totally. We want to improve trusts in the UK tax system and HMRC. It has gone down in recent years. We want it to recover, and transparency is one way for us to do that. So we will take that recommendation from the report, look at opportunities, whether it's with regards to data lab and research and providing reassurance that indeed we understand the billionaires, they are indeed part of the population that is indeed segmented according to our risk model, and where we judge there is a risk that needs investigating, of course, we would do so, because our objective is to maximise the return to the Exchequer, given our duties as commissioners.
Are you able to perhaps come back with some more written information to this committee to explain how you are going to create greater transparency around how much tax is collected by HMRC by the very wealthiest? Because I think that is, essential for improving the public's confidence in your ability at HMRC to do your job of collecting taxes in this country. So can you reassure us that that written information will be forthcoming?
And to reassure the committee, we do publish the top income tax payments and capital gains tax payments already, but we have not segmented in the way that you propose there, so we will take that away.
Okay, just one final point I'd like to go on, and then obviously I will pass back to you, Chair, if that's okay. Why has the amount of income tax paid by the very wealthiest in this country gone down, falling from 4.4 billion in 09-10 to just 3.5 billion pounds in 2014-15?
So there'll be a number of different factors that would go into the total amount of income tax paid. That will be a mixture of what's happening globally in that period, but also, as we talked about before, where the wealthy are resident and where they're reporting that income. Beyond that, there will be various market factors that influence the total income tax take overall. Okay. I don't know if anyone else in the committee have anything to add.
No, I'm not certain I know exactly what the figures you're talking about, but obviously
they're from this report. Okay, so they're from the NAA report, falling from 4.4 billion in 2009-10 to 3.5 billion pounds in 2014-15.
Yeah. So again, there will be a number of factors, economic factors that will affect the income tax from those individuals. But apologies, I don't have.
One of the factors be that there are fewer penalties being issued to the super rich.
So I'm happy to come in on that. I would say overall, though, the receipts from the wealthy have gone up. So they were 120 billion, as the report outlined, to 119 billion. So although different components of it might change, obviously we get wealthy receipts from income tax, capital gains tax, inheritance tax, stamp duty, land tax. So income tax alone is not the only indicator of the overall receipts, which actually did increase in 23-24.
I should just correct the record there. Those figures are from a previous Public Accounts Committee report on this subject. Okay. So that is not from the NAO, but it is from a previous report. So those are the figures. Regardless, I just want to make sure we have the correct source on record. Also, just quickly, is that the most recent data? Is that 3.5 billion pounds figure for the amount of income tax paid by the super rich from 2014-15? Is that the most recent data that's publicly available or that you're able to share with us?
No, I said earlier that we published the top 50 income tax payments as official statistics, but also in our annual report and accounts we estimate how many overall receipts come from the wealthy, which, as I said, went up in 23-24 to 119 billion.
So could we get a figure for the financial year since 2014-15? I mean, I was still at university from that figure, so it'd be great to see whether that's gone up, down, or stayed the same.
We'll take that away and see what
it's a decade old. If there isn't anything out there in the public domain, that's quite frustrating for us to understand whether or not the very wealthiest pay their income tax just the same as all of my constituents do who aren't super rich.
That's fine. We're happy to write to you on that.
Brilliant. Thank you.
Thank you very much. I don't want to dwell overly on billionaires, and I do absolutely take Philippa's answers and agree with them that it isn't just billionaires where the biggest risk is. There's a whole category below that. But John Paul, a bit of inspiration has come to me, and again, with a caution of what I'm about to say, I hope we certainly don't deal with individual tax cases on this committee, and I hope what I'm saying, the inspiration that I've got is not going to identify anybody, But we do know that one large tax case in 22/4 yielded over 2.5 billion. Given, I mean, that is a huge amount of money. If that is correct, it is a huge amount of money. It does rather sort of drive home the point that Lloyd is making, that we do need to pay quite close attention to this class of taxpayers.
Well, so Penny and Philippa might just say a bit more, but as the team have been trying to emphasise, absolutely, we need to pay attention to follow the risks and then investigate them very carefully and thoroughly to maximise the yield for the Exchequer. And that's the construct of the system that Philippa has set out just now. So we would agree if there was a significant exposure or liability that was due, that was known, the team would absolutely prioritise resources and investigate accordingly. In fact, there's legal duties on us to do exactly that. It's not optional. So we would agree. I don't recognise exactly the numbers on that case, but the team may be able to help us. But you're absolutely right. There are some big cases, some of which, of course, have been in the public domain already, and I've run through some of those. They take time. We have the capacity to investigate them, and we will. And Penny and I were talking this morning around the number of prosecutions, the number of serious cases. Our expectation that both of those will rise in the years ahead.
We'll come on to prosecutions. Unless any of the team want to tell me that those figures are wrong, I think we should move on from this subject.
I have to say I don't recognise that number relating to a single case, so I just put that on the record. But JP's point stand.
Okay, thank you very much. Rachel Gilmore, please.
Pardon me.
£2 million worth of assets doesn't seem a huge amount of money these days. You could own a 3-bedroom house in Fulham and have £2 million worth of assets. Similarly, wage inflation means that there are more people earning more than £200,000 a year. So, the number of the wealthy has gone up by 150,000 in the last 5 years. Why don't you have a bracket for the super wealthy, people that, have £10 million of assets?
Yeah.
Because it seems to me that they should be part of your target audience as well. And if the super wealthy group expands, which it's going to do,
yeah,
not least because people are greedy, how will HMRC respond?
Yeah. So, ultimately, I would agree with your point that the population is increasing. So you mentioned the 700,000 to the 850,000, and it is important within that population that we target risk, and wealth and income is one of those factors. And so when we look at the cases that our compliance case managers are working on, the vast majority of them are cases where individuals have income in excess of 10 million. So in effect, by using a risk model, we arrive at the segmentation that you're suggesting we should, which I agree with, because absolutely we need to focus on yield, opportunity and risk. But we don't start from that assumption. We allow the risk model to take us there, because if there was a case that was at 8 million or 7 million or 6 million, we wouldn't disregard it, and it might be the non-compliance and opportunity is such that actually the exposure to the Exchequer is higher than the billionaire who has conventional, lawful, well-planned tax affairs. The technical term was boring. Yeah.
So you don't think that your current definition is producing too broad and varied a pool of wealthy taxpayers for you to treat them as one single group?
I think we need to keep it under review. I think, the point the NAO make about keeping the population in clear view, the segmentation point is well made. We don't disagree about the importance of focusing on the highest risks to the Exchequer and to the taxpayer and bringing in the yield that our public services need. And we think the risk model is the right way to do that. But if we need to change that or tweak that a bit, partly to give public confidence, or in regards to the conversation we just had on transparency, then of course we're open to that. And the investment of additional capacity, to your point around the population is getting bigger, absolutely. So we need to increase the team. and we're going to add 400 to the team of 1,000 to bring an extra 500 million in. But Philippa, do you want to say anything more on the risk model? Yeah, go on, Penny, please.
Any level of reassurance that we have adjusted that definition in my time as Director General, not in Philippa's time as Director. And we do keep it actively under review. You know, we're interested in results and in managing the population to the best of our ability, and we don't let any definitions get in the way of that.
Yeah.
And do you see, JP, you kind of touched on this a bit earlier in the comments you made, do you see different risks from the very, very wealthy as opposed to just the wealthy?
Well, go on. Let's let.
Yeah. We've already touched on this.
Yeah. Well, yeah. So again, not necessarily through wealth bands would I say that, but what you see is people's kind of propensity for risk will vary. That will largely depend on, for example, you could have a very wealthy person that's paid a lot through pay as you earn, that may not have any offshore investments, and therefore all of their income is very visible to us. You then might have another individual who owns various properties, for example, in the UK, and decides to put those into a trust and then set up an offshore trust and then transfer between different companies. And they might, to us, be a millionaire, but be very non-compliant. And so it's that range of risks that's why we find it really important to actually have a risk model rather than a wealth model, because we find otherwise we might be missing out on people that actually are causing more harm to the tax system than just the very wealthy.
Yeah. Rachel, thank you.
Pleasure.
Lloyd.
I think
I want to start.
That's all right.
Do you know what? Another day, I'd love to ask you about trusts and entities and what you think about some of this stuff and some of the legislation, but not today. We'll move on to non-dom compliance and the non-dom regime, please. So, what impact do you expect the changes to the non-dom regime to have on your compliance work, and what sort of trends have you seen coming out of the run-up to the policy being implemented and then the implementation?
So just cover the headlines of the measure, and then we'll come to the point on the compliance model. So overall, the OBR certified a 34 billion central estimate for additional revenue. So in terms of that scale over the next over the 5-year period, the OBR then assumed a behavioural response of 12 to 25% of non-domiciled individuals to leave the UK this year, and so of course that assumption will be ultimately understood in the outturn. We will start to get data in January 2027 tax returns, which we'll be able to evaluate.
The sentence you've just said, so the OBR has already assumed that 25% of these...
12 to 25%.
12 to 25. And we know that if 25% leave, then the policy kind of becomes a
that's cost. Within the assumption of
that's already within.
Oh, it's already in.
Yeah.
Right, okay.
So the 34 billion over 5 years assumes that behavioural response, and obviously it has a high degree of uncertainty, but that 12 to 25% range, we will know with more certainty in 2027.
Understood.
Could you go into a bit more detail about what work HMRC is currently undertaking to ensure that the changes to the non-dom tax regime actually mean that more tax is collected? Because I think that's what the majority of our constituents probably are keen to see, is that this change has been much trumpeted, and I think people want to see that actually it is going to lead to more tax being collected by HMRC, and they'll want to have confidence that you are doing everything in your power to make sure that this tax change actually increases your revenues.
Yeah. So there's a few features of the new regime that seek to smooth that, to reduce that behavioural response, and to encourage new arrivals that have not been UK tax resident in the previous 10 years. So this is the 4-year foreign income and gains regime. There's a temporary repatriation facility, and then making sure that the way we provide our case management and support for customers is of a high standard as well. So the team can say a bit more about the compliance model, but in terms of the implementation of the regime, the guidance, working with representative bodies, explaining how the regime will work, and making sure that customers who are either coming to the UK or are currently in the UK understand it and get the support they need, that is an important priority for us.
And I think the key part is we work really, really closely with policy colleagues in the design of the legislation, so that what we're able to do is put our operational insight into the risks that we might have seen from non-domicile or offshore interests into the design of the legislation in terms of what information we might ask for, or indeed sort of some of the offshore avoidance legislation that we've recently done a call for evidence on. And so it's that combination of applying more resourcing, but also designing your policies and processes in a way such that people cannot get round them once you put them into place. And I think this is the biggest reform of over 200 years of taking domicile out of the UK tax system and replacing it with a residence test, which, as JP said, is really internationally competitive, but ultimately will mean that for the first time, people that are earning and resident here and putting their income and gains here have to report on and pay on their worldwide income and gains.
Okay, and not wanting to stray into tax policy for all the obvious reasons, but at the moment, as it stands, the United Kingdom is the only economy or the only country in the G7 besides Italy that allows very wealthy individuals to build up capital gains while living here, and then they don't have any obligation to pay any tax on these gains if they then leave before selling. So would it perhaps be more a fairer way of ensuring that closing the non-dom tax regime or loophole is effective if we were actually to look at that? And has HMRC done any work internally to look at what that exit tax might do in terms of actually making the non-dom tax regime changes truly effective? And going back to my first question, actually collect the right amount of tax.
So obviously the new regime is already in place. So it started this April. So there are transitional arrangements, but the new regime should be because we're taking out domicile. This is that is one margin that is no longer there for people to use. So in terms of compliance, we are now moving to a strict residency-based system. We have a statutory residency test. So that is now a much clearer basis on which to ensure compliance. So in that sense, that should actually be more straightforward. And obviously there are a number of different angles to this, because many of these people will still have complex affairs that Philippa's team needs to oversee. But the core principle of it, moving to a residency basis, should allow us to make certain we are more easily identifying and spotting issues. There is one...
There does seem to be still, I appreciate obviously it's already in place, but there does seem to be some uncertainty around how much tax will be collected through the changes to non-dom. So with that in mind, and there being a risk there, have HMRC done the necessary internal work to look at whether an exit tax or something along those lines would actually make the changes that have already been made to non-dom effective and actually collect the amount of tax that it rightly should?
On the specifics, obviously policy will be a matter for ministers to decide on at the appropriate fiscal events. But in terms of the actual changes, we've recently done a call for evidence on our offshore avoidance legislation, and that includes things like transfer of assets abroad, settlements legislation, and various anti-avoidance capital gains tax measures. And that's exactly for this reason, to say, are these fit for purpose, particularly since the non-dom reforms, and we will be reporting on those summaries in due course. So that work is in train to look at how do we make sure that people pay the tax that they owe and do not use contrived arrangements to get around them.
Are you able to give us a time frame for when that work began and when we can hope to see it conclude?
The call for evidence was in the spring. I believe it closed in March 2025, and we expect to be able to publish responses shortly.
Okay. And do you think looking at an exit tax is part of the consideration for what HMRC?
I think that I don't think we can go there, because that'll be a decision for ministers, and that is a policy matter. Okay. Any more, Lloyd?
Could I just
of course.
Just very briefly. So the sort of art of taxation, I think there's a saying, is trying to pluck the goose for the greatest amount of feathers for the least amount of hissing. And I'm slightly worried about the sort of non-dom policy risk. I know this is probably also a question for the ministers, maybe for a later day, but as kind of tax bods, if you like, would you have done this?
And what, sorry?
The non-dom tax status step down?
It's government policy, and our job is to administer it. And in all seriousness, that's the best we can do. I made the point around the OBR.
I think it's a fair answer, JP. I don't think we can go any further than that. We've got to be careful about where we stray from facts into policy, and this committee doesn't do policy, so we've got to be careful about that. I am now going to suggest that the committee takes a break. The clock is at 11:05. If we could be back here promptly by 11:10. Order, and we will, as I say, resume. Order. And it just so happens that the first question is down to me. And it's on tax agents. How, and perhaps to you, Penny, please, how will you develop your approach to better target specific risks, such as unscrupulous tax agents? And in asking that question, before I have every tax agent writing to me, I mean, the vast bulk are, as I know from my own advisors, very upstanding and make sure that their clients do pay the right amount of tax. But there are a small number who are quite happy to make sure that their clients don't necessarily comply with the regulations. How are you going to deal with that?
I would have said that as well, but before I start, the vast majority of agents seek to do the right thing. But absolutely our work to tackle agents who facilitate non-compliance is extremely important. We've recently combined our agent compliance team with our specialist team who tackle promoters of avoidance, so that we can cross-fertilise the skills between the two. And we work collaboratively to use a range of tools at our disposal to tackle those intermediaries who are facilitating non-compliance. We have actually we have around 290 people in those combined teams, and over the past 4 years they've brought in over £3 billion between them in relation to that work. And obviously when we see unacceptable behaviour in the population, teams across my compliance work will escalate those. We focus on the behaviours of agents in general rather than necessarily specifically wealthy agents, and obviously agents in general may have a mixed portfolio of clients. We do know those agents who are particularly supporting wealthy clients, and we're looking all the time at how we can improve our work to tackle those non-compliant agents. We published a consultation very recently on how we tackle the conduct of agents who aren't meeting our standards. And we also, do a range of things such as referrals to professional bodies. And we're also working at the moment to develop a risking model in particular to look at agents and their behaviour.
So do you have any sort of mechanism whereby you have a sort of a group of agents who you regularly correspond with, so that particularly when you make tax changes, if there are consistent problems with that tax change, you can issue the appropriate guidance to all, I think it's 33,000 tax advisors?
We work, I chair a group called the Compliance Reform Forum. The minutes are published on the HMRC website, where we work with the representative bodies for the majority of agents, and we work very closely with them on a whole range of different issues, but certainly we want to make sure that they're really well informed. Jonathan also chairs the representative bodies steering group, which covers a whole range of changes in HMRC, policy issues and service issues as well. So, we seek to have a really fluid dialogue all the time with agents, and we certainly consult with them on a whole range of different issues. We bring them in, for instance, to design things like our one-to-many letters to help give feedback on the quality of our communications with taxpayers to make sure they're as clear as possible. They're a really valuable resource for us, but we also obviously welcome any insights that help us to understand if agents aren't doing the right thing, and we will pick those up.
And if you pick up a particular problem from an individual case, it might not be the taxpayer's fault, it might not be the tax advisor's fault, but there is clearly a glitch in the system, or an unclarity in the system. There isn't such a word as unclarity in the system. How do you take that learning on board?
So we're constantly looking to try to understand whether or not our guidance is clear, and particularly in the area, for instance, of legal interpretation. That's an area where we're paying particular attention. It's a part of the tax gap we're keen to reduce. And in those kinds of areas, we put out new guidance. We have this set of guidance notes called Guidelines for Compliance, and we try to identify areas that are particularly contentious or difficult and set out clearer guidance in those areas, and there's been a number of those published in recent years. It's obviously important that everybody sees those, so it's not just the production of them. You know, we want to work again with the rep bodies to really understand that people are getting to see those and that they're using them to help them to be compliant.
What about your system of pre-notification prior to submitting a tax return? Pre-notification, so that you, tax advisor, taxpayer, have much more time before a deadline to actually sort of discuss any areas that might be difficult.
We try to, have an open dialogue, and obviously Philippa's customer compliance managers in particular may be in a very open dialogue, particularly with our wealthy customers, to try to understand the risks that they are presenting, to have a free flow conversation about what particular events might have happened in a year that would mean that there were taxable events coming in that we should be clear on before they file. We certainly do keep that dialogue going, as well as then look at the filing and work out whether or not there are any risks that are presented that we would want to open an inquiry into. It's in our interest and the taxpayers' interest that we get as much right up front as we possibly can.
Get it right first time.
Yeah.
Very good. Thank you very much. To move us on, I think Nesl is going to help us, please.
Thank you very much, Chair. I'm going to ask a bit more about the tax agents and the risks associated. Because nearly a quarter of wealthy individuals use agents who are basically accountants for the ordinary person who might not be able to afford an accountant. I want to understand a bit more around the non-compliance and your assessment. Is it incompetence, or is it, in your view, deliberate non-compliance?
And that's in relation to the agent, sorry, or the...
Yes.
Right, so I suppose just for the record, about over 70% of our wealthy population have agents, and when you go up into the sort of wealthiest end of that, it's about over 90%. So it varies according to the complexity that those people might have and whether they need advice. In terms of the range of behaviours, in a way it maps quite closely to the range of behaviours we see in customers. So that will range from simple error or mistakes where maybe, as you pointed out, Chair, people might not understand or have got something wrong, through to obstructive behaviours during our inquiries. So an agent might, for example, take a long time to reply to information requests, maybe look to send us a lot more information that might not be relevant, for example. And then that goes right through to criminal behaviour, where we then look to criminally investigate them if that is the behaviour that's presenting, i.e. false records, misrepresentation of a position, and telling a lie, in effect.
And so I'm trying to understand, because in your analysis of where you might minimise the risk, so setting out of the risks that you identify, your interaction with the agents will be a really key component to being able to make sure that you prevent you prevent non-compliance in the first place, which presumably for HMRC is a much better, more effective approach than retrospectively going after individuals. So in terms of your understanding of the agents as a whole, you've given us some detail about some of your interaction. Is there a systematic approach from HMRC in interacting with what are a significant number of agents who support the income delivery for HMRC? What is your frequent engagement, understanding, almost profile of those agents themselves?
So I think you're right. We need to see it as a whole system, and think about agent conduct, promoter powers, and look at the whole suite of opportunity to make improvement. We published 4 consultations in the spring statement aimed at raising minimum standards of behaviour, tackling non-compliance and contributing to closing the tax gap. There's 4 elements to that. So making better use of data, so enabling that early identification and that getting it right first time, strengthening our ability to take action against tax advisors who facilitate non-compliance, measuring measures to close in on promoters who market tax avoidance, and then finally options to simplify and strengthen penalty powers. So we absolutely recognise that across those 4 domains there's opportunity. We've done those consultations and we will set out the next steps. And I think it's a fundamental part of us getting the UK tax system to work really well. So, when we think about things like making tax digital, we are trying to nest the UK tax system increasingly in the natural systems of the economy, whether that be through software providers, in the accountancy market, or the way in which people regularly record their receipts, their expenses, and report their taxes. So the more it is the way in which we do business, the more it is preventative and early, the better. But as Philippa and Penny say, for those who choose to obstruct or ultimately don't follow the rules, we have the powers to go to penalties.
Let me ask you about that then, because I think the majority of the population understand that for wealthier individuals their tax affairs are complicated. They recognise that they would have an agent or an accountant in the way that the majority of people, certainly my constituents, are unable to pay for. And they recognise that HMRC has it is cost effective to have a risk-based approach so that you ensure you are supporting individuals to pay the right tax. But there will also be individuals, wealthy individuals, who simply are just trying to be non-compliant. And in those cases, what is HMRC doing to be as clear as possible and to come down on them to say, actually, non-compliance is actually you not paying the tax that you should be paying?
Yeah. Your summary is spot on, and then that takes us back to the risk model and identifying those cases and then taking the appropriate action. Penny can talk a bit about the sort of hierarchy of steps we would go through there, but ultimately we would end up at prosecution if that was the last resort.
If I could just come in there, JP, and Philippa started to touch upon this in her response just earlier. But the situation is quite a grave one. I mean, we know that actually London is a world-renowned hub for professional services, which means perhaps more than any other city on the planet, we have an army of lawyers, of accountants, of promoters of schemes, and of tax experts and advisors. So you, as HMRC, have a unique challenge, perhaps more than any of your equivalent numbers in other countries in Europe and further afield. And I appreciate there's the consultation work you've already underlined, but what are you doing to take on that unique challenge? Are you able to identify, profile and target new emerging risks? You talked about people who take a long time to respond, who deliberately provide too much information. How are you looking at what the next threat and the next challenge posed by this army of people who go about their day-to-day lives helping the very wealthiest minimise their tax liabilities?
I'll let Penny come in and talk about how we try and make sure we stay current, remain alert to new risks, because I agree with you, that is a really important part of managing the threat and the exposure. At the same time, sort of come back to my original answer, it's about making sure the team have got the capacity and the capability to...
You have, because I think a lot of our constituents would think HMRC is hopelessly outgunned, and that there is, quite frankly, a very well-trained, very knowledgeable part of our professional services sector who go about their life making HMRC's job pretty impossible. So what we'd like to see is reassurance that HMRC is up to the job. I don't think any other body of your equivalent standing in Europe has quite the same challenge as you do here in the UK.
No, I mean, the NAO report credits the team for the progress that they've made over recent years in more than doubling the yield from our wealthy team and managing to keep the tax gap at around 5%. But your point, we want to go further. We want to reduce that tax gap. And my job, working with ministers, to make sure the team have got the capacity and capability that they need. They will have more capacity, they will have more investment and more enablement to do more. But shall I just let Penny say a bit more about the strategy and the plan and what we're doing? Yeah.
And I would just say we're far from outgunned. We have huge expertise in this space, and we constantly seek to build it because we're not complacent. But you can see in the results that the NAO report describes that we are improving both the return on investment, and indeed you can see in some cases, and obviously a limited number because they're in the public domain because of criminal prosecution, that we can bring the most serious cases to successful conclusions in trials. And that range of work that we describe rests on a huge depth and breadth of expertise in HMRC. Philippa has alluded to the fact that we're seeking to expand it by bringing in wealth management expertise to help inform our understanding of how wealthy individuals manage their affairs. But, you know, we tackle some of the most complex cases in the country successfully, and you can look at our prosecution record to see that.
I suppose I appreciate we've already talked about the consultation work that's underway, but actually HMRC does have existing powers to go after and to tackle tax advisors who are facilitating non-compliance, but you don't always use those existing powers. I think I'm right in saying there were no penalties levied on the enablers of offshore tax evasion in the last 5 years, despite landmark powers introduced by the previous government in 2017. So you've had that power since 2017, and it's not really ever been used to go after those who were making it their day-to-day job's worth to enable people to evade tax using offshore tax havens and the like.
So we use the powers that we think are most effective to tackle the problem in hand, and you know, we constantly look to use the powers that will disable and, you know, bring the best effect to those challenges. You know,
one that I just mentioned, if it was effectively used, the penalty that would be at the end of it could include either a £3,000 fine or 100% of the amount of tax that was dodged, whichever is larger. I imagine it's normally going to be the latter, and probably a lot bigger figure than £3,000. So that's a tool that you have. Why is it it's never been used?
I can't actually speak to that particular power today, but I'm happy to give you a bit more information if that would help. I think we use the powers at our disposal to apply to the cases that we have.
Don't use
in
this
the best one.
You don't.
And
that is
sorry.
at your disposal, and you should be able to outline to this committee why there has been no penalties levied on tax experts, tax advisors, lawyers, whatever you want to call them.
You just confirm the power, sorry. Could you confirm that? Because we have levied other penalties. So I suppose
it's on offshore.
But sometimes offshore is not the lead risk that might present. So, for example, we have prosecuted 41 enablers in the last few years.
It's never been the lead risk. There'll be no instances.
There will be when it's lead risk, but it might not
used.
always be a criminal investigation lead risk. And so we really do have to look at what are the behaviours, what evidence do we have, because there is a high bar to use criminal powers, and then is that the most relevant tool in our armoury to make? And we do arrest agents if we believe they should be subject to arrest, and we've got a strong record on that, but we can take away that particular power because I think it depends which ones you're referring to.
I think that's about evasion, so that is about criminal behaviour, not aggressive tax avoidance. You can understand why I, and I'm sure other members of this committee, would want to see those powers used by HMRC, considering...
Shall we just ask JP to let us have a note?
Yes, that would be really helpful.
We're not 100% clear about which power we're talking about, and a note would clarify that.
Happy to do that.
Thank you.
And then just touching on then those who promote offshore tax avoidance schemes. I think it was last month there was a landmark action which I certainly welcome, and you did issue stop notices to Paul Baxendale Walker for covering 2 offshore arrangements. That action that you took there in that particular case was the first time that such action had been taken against an individual rather than just a company. Yeah. And my understanding, although I'd appreciate if you could confirm this, is that he could face criminal prosecution if he does not comply. So with that in mind, can you reassure us that actually these powers will not be used so sparingly in the future? This is only the first time it's happened. Can you reassure us that you will continue to take robust action to stop those who are actually promoting or enabling aggressive tax avoidance schemes, particularly offshore ones?
Yeah, we can. And, I think, like you, welcome the progress the team made with regards to the stop notice. And we will use them where we think it is the right thing to do and it's necessary. And to clarify your point, it does require those that are in receipt of the stop notice to stop promoting tax avoidance schemes or potentially face penalties or criminal prosecution if they fail to comply. So we have that power and we'll use it, and we have done so recently.
Are you able to reassure us about how we can see it scaled up and it used more frequently, because this was only the first time HMRC.
I think it's Philippa's point about the nature of the risk. So I think we're happy to reassure the committee that we use the power when we think it's appropriate to do so, and we're happy to stay in touch with the committee about, you know, the range of powers, I guess, is the sort of subject that's coming across here. The ones we've used, whether it be about property freeze or disclosure and stop notice, where we're using them, where we're not, and how they are part of the suite of enablers that the team have. And if the team say to us there's things that we need that we don't have, our dialogue with our minister is constant and regular in terms of, you know, asking for the support we want to give us the enablers we need to close the tax gap. That's the top priority. We're very determined to do it, and we'll use our powers where we think it's appropriate.
And just to put it in context, you know, there are, in terms of marketed avoidance promoters, our impact and use of our powers had a significant reduction in the number that we see active in the market. So we're talking sort of 20-ish active promoters that we publish a list in terms of how many active promoters there are, and we also publish how many powers we use, including our stop notices. So that over the years, our work on marketed avoidance and particularly promoters has had a dramatic effect on that part of the advisor population that you mentioned. But of course, as JP said, we've done the consultations recently to then think about where can we enhance our sanctions more broadly, particularly in respect of what you're talking about in terms of, say, offshore evasion and other areas.
Okay, thank you.
You just want to say something about your upstream and downstream activities, and the fact that your upstream activities in recent years have actually yielded quite a and that's including where necessary obtaining more powers. So you are looking constantly at how to make the system work more efficiently. Do you just want to say something about that, JP?
I mean, one of the things I was trying to allude to earlier is about the way in which HMRC operates in the economy and how we can increasingly make that a more regular sort of business as usual process that nests with the natural systems of our economy. And I mentioned making tax digital as an example, and Jonathan and Angela can say a bit more. But rather than, you know, reporting in arrears and the complexity of gathering together receipts and expenses and all the rest of it, it's obviously worked well for that. We're mandating it for income tax for those with income above 50,000 from next year, and then we'll come down the income threshold. And that is about quarterly reporting that is up to date and enabling people to have accurate records, reporting in a timely way, and we think that will make a big contribution to upstream compliance and support a closure of the tax gap. And the team can say a bit more about the small business tax gap, which is a large proportion of the overall. We've talked a lot today about wealthy tax gap, but ultimately we want to enable people to get it right first time. We want them to have clear guidance, good communications, and we want to have good services that are quick and easy to use. MTD for VAT, I think the evaluation is pretty encouraging. We're hoping to have achieved the same for income tax with rollout over the next few years as well. And we increasingly want to make sure that the data and the systems that we have, our use of APIs and the way in which we interact and intermediate with the tax system is as easy as possible so people can comply first time. But Jonathan, do you want to say anything else on the strategy there and opportunities?
Yeah,
Thanks.
And again, back to some of the things we've already talked about, actually having this data exchange infrastructure in place is also a strong upstream activity. Individuals know that we receive millions of records about offshore accounts. So again, if we can get this right, get the infrastructure right, people will know that we have that information, and that will encourage them to comply. So there are lots of different ways in which that will play out for different parts of the market. And as I said, with wealthy, that information exchange, all the things that are coming down the track in terms of, for example, crypto asset reporting, people will start to realise that actually, you know, we will have that information and encourage them to make certain they get their records right and are not careless or otherwise with their record keeping.
There is a tax gap estimate at the moment. The steps that you're outlining and proposals that are being considered at the moment will improve that estimate, in your view?
Yeah. So overall, the OBR has forecast a reduction in the tax gap. The current tax gap at around 4.8%, and they are forecasting to get that to 4.4% at the end of the forecast period, and that equates to an additional annual yield of $7.5 billion. We will publish the latest iteration of the tax gap shortly, and we continue to refine the measurement of that based on the samples we do and the input data that we can bring to it. But ultimately, our objective is to reduce the tax gap overall, and the wealthy tax gap and the offshore tax gap are a part of that. Currently estimated, as I say, broadly similar, 5%. With all of the work that we've discussed today, one would hope to see that also reduce over the next few years.
The wealthy figure too.
Yeah.
Okay. Is there any particular work that focuses on the tax gap on the wealthiest individuals as opposed to the overall figure?
Well, so it comes back to some of the things the team have spoken about today. So more capacity to do more, and then more enablement to be more productive, to target according to the better data that we can make available to the team to focus the work. Specialist capabilities, some of the policy changes also help.
Understanding of what that figure is at the moment, how confident are you about that figure? Because it does seem low.
Shall I say a little bit?
Jonathan,
So overall, the tax gap is something that is very difficult.
Just to be clear, I should have said the figure I'm referencing is the 1.9 figure.
Yeah.
And it feels as though when we consider the numbers from HMRC, and we're talking about wealthy individuals, a 1.9 billion figure obviously is significant for many people, but in terms of the overall numbers, it seems rather low. Yeah. And my question was, how confident are you in that 1.9 figure?
If I stand back and then I'll get on to the wealthy. So overall, the tax gap is a difficult thing to estimate. What are you not collecting that you should is a difficult concept to sort of put into practice. We're one of the few countries that publishes a comprehensive estimate of the tax gap. Different elements of that have different strengths. So if you look around sort of 75% of that overall figure, not just the wealthy, that is based on some very, very robust statistical methods. As you get into the more niche areas, that does become difficult because we don't have, as we were talking about actually with some of the wealthiest, we don't have external data that we can validate our receipts against. So it is harder to do that. But that's where we rely on looking at particular case risks. As we work very closely on the wealthy. We will work very closely with Philippa's team. What are the trends that they are seeing? And from that, how can we sort of understand how those risks might manifest themselves and how much might be at stake. And obviously within Philippa's team we have deep experts in terms of understanding some of those wealthy risks. But some areas are going to be easier to do than the others because the wealthy is quite, as we've talked about before, quite within that group there is a lot of different behaviours, lots of different categories of individuals. That is going to be more difficult part of the tax gap to estimate.
And confidence in a figure is important.
Yes.
Because it gives the organisation a sense of whether they are successful using the tools that you have at your disposal and also targeting a group of individuals who will generate significant income for HMRC. So I just want to press again on that figure. If you're not confident about, if it's simply impossible to ever know what that figure should be, I think that's really important.
I would. This is our best estimate, but this is a difficult part of the tax gap to estimate.
Could you maybe just provide? It might be helpful. Could you provide a bit of detail about how HMRC has reached the £1.9 billion figure for the tax gap for the very wealthiest? Does it simply include routine non-compliance, or does it actually cover deliberate and aggressive tax avoidance? And is it only based on savings and income, or does it include other types of income, such as, say, a dividend?
It will aim to be as comprehensive as possible, so look across all tax types and all sorts of behaviours. So one of the areas we do see, for example, in this area is what we call legal interpretation, so people pushing boundaries of tax, or trying to exploit where there is some ambiguity in how tax law should be applied. So it should be comprehensive. It's aimed to be comprehensive, and it's aimed to look at all the risks. And as I said, this is not something we do. This is a whole organisational effort, drawing on the frontline expertise of Philippa's team.
And just for your point of clarification, it is personal taxes that this focuses on largely, so sort of income tax and capital gains tax, and components of inheritance tax and trusts that we talked about earlier.
So what does it exclude then?
So it wouldn't include, for example, the businesses that wealthy people own, because that is rightly recorded in our business tax gaps. So
Our dividends, would it include that?
That would be included in the income tax part.
Okay. Thank you. It does seem around this idea of your estimate of the wealthy tax gap that it's not clear, and I felt reading the NEA report it wasn't clear, so hopefully you can provide some clarity today. The wealthy tax gap has remained under £2 billion for a while now, but the number of wealthy individuals has grown quite significantly from 700,000 in 2019-20 up to 850,000 in 2023-24. And at the same time, the increased compliant yield shows that you have been able to find £3 billion more in tax that was not paid by very wealthy individuals. So if I understand this correctly, the total estimated tax owed is smaller than the additional tax recovered through compliance, but at the same time, the net loss in tax revenue has increased by 21%. So I really appreciate some clarity, because it just is not clear. How can the wealthy tax gap remain stable, the compliance yield increase, and the net loss also increase at the same time?
There's a few things in there. Let me try and unpack them in order. Firstly, we think when we look at, obviously, while the number of people captured by the wealthy definition has increased, the increase in actually the total income within that group has broadly kept pace with the tax gap. So it's broadly, the net tax gap is broadly around 5%, and it has been consistent around that level. So that's why it goes up to 1.9. But it's broadly the same as a percentage of liabilities. In theory, what you can do is add our compliance yield together, and I'll be very clear about what I'm saying in theory. You can add our compliance yield together with our net tax gap to get a gross tax gap. So that gives you a sense as to kind of, if we had done nothing, what would the tax gap have been? So now, that happens in theory, but in practice, the way we measure these two things are not always additive. So there will sometimes be timing payments, so timing differences around particular payments, which means they do not, just because we record compliance in 1 year, it may relate to different years of activity. So broadly speaking, what you're seeing is a picture of, if we had done nothing, non-compliance would have increased. What we are doing through our activity is actually keeping the tax gap at a constant percentage, roughly constant percentage of receipts, and that gives you your 1.9. So, but there are some sort of challenges in there. That is broadly the picture, but it is. We'd be a little bit careful, and we do describe. We do have some guidance on our website to try and discourage people from doing too much of that adding together the compliance yield and the net tax gap, because there are sometimes timing differences about when things are recorded, and some of that compliance yield is not extra money we've brought in, but sometimes it's protecting protecting money we've already got from that we otherwise would not have collected. So does that help a little bit in trying to unpack a bit how that works?
A little bit. It would be useful just to move on if we could. I think we're probably going to touch this at some point later in the session anyway, is to look at compliance then in a bit more detail.
Should I ask a few questions on that?
Yes.
I'd like to just, we've already spoken a little bit about this, but I'd like to just come back to it, the wealthy compliance cases, because the report also talks about the process for being able to deal with some of those cases. By their very nature are complicated, and cases may take a lot longer because of due process and lengthy correspondence with the taxpayer, etc., agents. Philippa, you already detailed some of that, as of other panel members. But the average time it took for HMRC to close a case increased each year between 2018 and 2023. It peaked at about 20 months before it then fell again. Yeah. For investigations yielding more than 100,000, the average time it took in 2023-24 was 40 months. So that's a significant increase of 27 months, up from 27 months in 2022. For an ordinary person, a teacher or a nurse in my constituency who is earning far, far less than some of the wealthy individuals that we've been talking about, who are taxed before their salary even hits their account, it is very difficult for them to stomach that HMRC may take 40 months to investigate a compliance case. But even more to the point, that figure has got worse over the last few years. I wondered if you might be able to comment on that.
I'll bring Penny in. We were having this conversation this morning that the one data point that I think is important to put alongside the increase in time is the average value that the team are now collecting. So Penny will have the exact numbers, but as I recall, it's more or broadly doubled, and it is because we are increasingly doing what we described earlier, supporting more people to get it right first time upstream, and then targeting our resources on higher risk, higher yield cases, bringing more in, but it does take longer, as you say. And that is always the productivity conundrum. You could do low value quick stuff and get low value return, or you can take on the more complex cases but recognise they will take longer, but when they crystallise the yield is higher. But Penny, can you just give us the
Yeah.
Penny, and I'm sorry to interrupt.
No, it's fine.
I'm really keen to hear what in response to that. But does it not concern you that almost half of the compliance cases close with no yield? Because from what you've said, John Paul, actually I would suggest you're saying that doesn't matter as long as we are getting high yield.
On Penny.
Okay.
Penny.
So let me talk first to the yield and the return. So we have been focusing our teams on more complex casework, and that has been seen in the average return that we're getting from those cases in the wealthy area, which has tripled, broadly speaking, from 34,000 per case to 94,000 per case on average. Obviously, a wide range within that. I should say that we have a constant focus on timeliness of our cases. It isn't something that we just regard as sort of trade-off for complexity. We're constantly looking at ways in which we can improve the pace of our inquiries, and that we recognise there can be delays at the other end of our inquiries, but there's a constant focus in the team on how we reduce the length of time it takes to conclude, because obviously we want to put our resources onto the most productive work and do that in the most effective way. That said, there is great complexity sometimes in some of these investigations. In terms of cases closed for nil, that can be for a number of reasons. It can be that we've opened an investigation and that we simply find there is the affairs were in order. Obviously, where we do that, then that's closed hopefully reasonably quickly. We are, we're doing our work in a risk-based way, but we don't know the facts sometimes until we open an inquiry. Philippa, I don't know if you want to add anything on the nil point.
Yeah, and I think on nils we've actually, we recognise that number is a number that we'd like to reduce, and that's what data helps us to do so that we can better target it. And we've talked a little bit about the investment that we want to make. But as Penny says, we'll start with a global estimate of what a risk might be. But when we then get the evidence, or in fact someone can supply us with the contracts of share sales or potentially the trust documents in terms of what they invested, or they can demonstrate that they're not UK resident, then we would look to rightly close that for nil. And it will depend on the nature of the risk that we open into those individuals. But all the investment that we've talked about today should help us to continually better target that.
I just want to be clear, it doesn't, and I'm not making a value statement here, it doesn't concern you as an organisation that almost half of the compliance investigations close in no yield. That's because, for instance, it might be that you've investigated and there is no reason. I'm just trying to get a sense of is that okay or not?
The opportunity is to reduce that. Absolutely. We would like to reduce that. We don't want to open investigations into cases where ultimately it was sunk effort, if you like. But at the same time, the team need to be empowered to investigate where there's a concern, and sometimes they'll conclude that that concern is not real and might be a whistleblower or whatever, that they actually, it's all lawful and everything should be left alone.
Where I want you to end up is not opening cases at all.
Well, indeed, and that's the risk with the. Well, that's right. That's the risk with the data. So you do want the team to be empowered to operate in a risk-based way, but you also want them to be empowered enabled to risk and target in a better way. And so when we open a case, it has a higher likelihood that we will get the yield. And on the one hand, of course, we'd like them to crystallise faster and get the yield in quicker. That would give us more confidence in terms of reporting performance against our targets. Having said that, coming back to the previous point, some of the most complex cases take a long time. And, my first few weeks here, I've stepped through a number that are live now. And, the teams have been working on some of these cases for months and months and months. And it's good that they don't give up on that, because if they do, that deterrent effect, when we do get those cases to court, that also really matters.
Well, sorry, Lloyd, I'm just going to say, I want to come back to the length of time, because there are some risks associated with the length of time taking so long. But if I could just quickly talk about the targeting of investigations to cases where non-compliance is happening. Has that improved as an organisation? Can you point to one or two things that the organisation has done, in recent times, where you can say, actually, we have got better at targeting our efforts so that the results are better at the end?
Absolutely. Our average case holding, as Penny said, has tripled in that time. So we've gone from over 30,000 per case to over 90,000 per case.
Why? What has happened? Is it the
so
resourcing?
Better data, and also deployment of our most senior tax professionals to the risk, but the better data is particularly that we receive from Offshore now. So previously we did not know about people's financial accounts offshore unless we already thought there was a risk and then requested it. Now we get all of that automatically, and we're able to then use that in our risking systems to help us pinpoint and target which ones we should open.
That's really helpful. I want to ask about the length of time, but is there something you wanted to come in before then, Gordon?
Just part of that, if that's okay, and that's all. I think what's perhaps quite worrying, looking at this NAA report and other reports, is that the yield is very, very low. So could we get some clear reasons why we think that actually 46% of investigations still close with no yield at all?
So ultimately, how it would work in practice, if I give you a bit of an example, is that we might identify either a risk with a specific individual, where we will then go through a lengthy, sometimes to and fro, to get the information that we require for them to either explain the position or for us to determine the tax outcome. And our job is to make sure the right amount of tax is paid. If they are able to provide evidence from that particular individual that in fact they have paid the right amount of tax, then we would close that investigation for nil. You then will have other types of projects that we might do where we see a risk in a particular sector. So let's say someone, particularly when we changed our capital gains taxes reporting requirements recently, we might therefore do a project that looks at have people reported on time in line with the new legislation. That might then open inquiries into 500 wealthy individuals who we believe did not report on time. And of that 500, there will then be a percentage that in fact are able to demonstrate that they did, or that there was a reason that meant that they were unable to. So you get a real range of what might sit beneath the nil number, ranging from singular inquiries through to project work.
And just on the point about the yield being low, that's not how I recognise it in my first few months here. The NAO, I'm saying this accurately given the report, credit the improvement in the yield from this team in terms of productivity. They talked about the tripling per case. And if I look at it overall in terms of yield targets that we agree with the Treasury and with ministers, we are on track again to exceed that. And that is what Penny and the team are resourced for, and they are delivering ahead of their targets. So overall, I'm content that the way in which compliance has been led and delivered in HMRC is improving.
And from quite a low starting point.
Well, we're keen. We accept that we want to go further. The ministers are clear. Well, ministers are clear that we want to close the tax gap. That's top priority. We are resourced to do so, and the OBR are scoring that. on the assumption of our plans, and we are looking forward to delivering it. But it does build on some strong foundations. I feel that when I look at the progress recently on recruitment, the Tax Compliance Academy, recent yield target performance, it gives me confidence it's feasible.
And if the process of investigating has grown in how long it takes from 27 months up to 40 months, and you've both talked about that. You said these take months and months and months. You said it's a lengthy process of back and forth.
For the most wealthy ones, our overall average time has actually reduced.
Well, why has it grown? Because if you were doing investigations and they were taking 27 months, why is it now taking 40 months?
The average obviously can be skewed depending on which cases closed that year. So if you get a year, which we did have, where particularly lengthy, long-running inquiries closed, that can sometimes skew it. But in general, it will come down to, as I talked about earlier, how willing the customer and their agent are to share the information that we need, whether they obstruct that. So within the due rights that taxpayers have, they are allowed to appeal our information notices. They are allowed to appeal that to tribunal to say that they are unwilling or do not think that we are targeting that appropriately. And those are all taxpayer rights that are available to everybody if they do not agree with our inquiry
Are some of the
notices.
individuals actually being deliberately obstructive? And it's not about appeals or using the proper processes that are available to them, but are actually some of these individuals under investigation deliberately slowing down the process?
Absolutely. And
so
if
then
they
do you
do
not
that,
worry that if it takes 40 months on average to complete an investigation, that there is a serious risk associated with flight? So these people just get out of the country, and actually then it's impossible for HMRC or indeed any other body or agency to track them down.
Yes, there could be a potential flight risk. I mean, that's not something that we see in our largest cases a lot. What I would say around that,
it does happen that
I don't have any examples of that from the work that I've seen.
Out of the country.
I don't have any examples of that personally from the work that I've seen.
But you do
However,
think it happens?
we do work with. We have an arrangement called the J5, so that's the Joint Global Chiefs of Tax Enforcement. We work very closely with international partners so that if anybody was to try and leave the UK, we would absolutely then pursue them in using all the tools that we have, but mainly working with our jurisdictional partners. And that is a really important element of the work that we do to make sure that people cannot escape the amounts that they owe. But absolutely, is it harder to collect debt when someone is overseas? Yes.
So do you think...
Take the other, if you take the other end, you're assuming individuals are not trying to just flee the country. We've also been told by professional bodies that for lots of wealthy individuals and their agents, actually the length of time it's taking for their cases to be resolved is highly frustrating for them. It's hindering their ability to be able to get on with their own accounts and their business. So actually there is a impact on them as individuals, often part of organisations, stress, anxiety, etc. So really my question, it goes back to I take the point that actually it can depend on any particular year depending on the cases and what that average wait time might be. Does HMRC have a view of what that figure should be? Should it be at 27 months for a case to be concluded? Should it be at 40? Or is there an aspiration for a period of time that is much less? What should the professional body's expectations be for these complex cases?
So their expectation should be that we work in line with our compliance professional standards, and my ambition would always be to reduce that down to the appropriate amount of time to get to the right amount of tax being paid. I do not have a specific target, but quite like what Penny said earlier, we look in the round at a number of those indicators, and it is important to me to make sure that we are working in a timely and effective manner, and I review those statistics with my team on a regular basis.
So if the waiting time, just hypothetically, suddenly next year shot up to 100 weeks, how as a Member of Parliament will I know if I should go to the House of Commons and say to the Minister, this is unacceptable really?
Yeah. Well, I think the first thing to reassure is I would consider it unacceptable as well. And so would we. You know, Philippa's point around timeliness, around customer service, your point around the anxiety and the concern, that matters to us. We want to respond to that and close these cases out as efficiently as we possibly can. But we also have a legal duty to ensure the right tax is paid. So this indicator is an important one. Where it is feasible for us to reduce it, particularly with improvement of enablers, so that might be support for the team in terms of productivity and the way they're working, then we want to give them all the support they need. At the same time, going back to some of the challenges earlier about the most complex cases with the best professional advisors and the context we're operating in, we also want the team to be empowered to take on those cases, recognising they will take longer. But if you're looking for some assurance around us reporting that indicator, so as Parliament and as a committee, you can hold us to account in that regard, we're very happy with that. And there's a recommendation from the NAO in the report in terms of transparency of our compliance regime, our strategy, our approach. Is it improving? Are we on track? We will, of course, account for that every year in our annual report, and I will come to the committee and no doubt in the autumn and talk about that, and I'll bring this crew with me, and we'll answer those questions, and we'll ensure that data is transparent for you, because we want the same as you do, the tax paid in as efficiently and least disruptive way possible. But I do think it's important the team take on those big cases and recognise that sometimes they will take longer.
Thank you. I've got a final one, and then I don't know if you want to come in before we go back to the chair. Is there this relationship between the length of time it takes to complete these cases and the yield?
Yeah.
Is there a relationship in your assessment, in your understanding? Is there a trend that can be identified, or it's simply just not the case?
Annie, do you want to?
So I think there are multiple factors at work. I think a factor is complexity. And certainly, we have sought to improve the productivity in this space, and that has included taking on more complex cases. But our case mix changes every year because we're looking at risk, and we're looking at the most effective way to tackle risk. So it's only one factor, I would say, and there will be multiple different types of work going on in the wealthy team at any given point in time. Philip has given you an example of project work, lengthy one-to-one inquiries that can be international. It varies a great deal. So I think it would be wrong to try to oversimplify that number.
Thank you.
Now, I've got some questions to try and get clarity around this. I've been listening carefully to my colleagues' questions, and it seems to me that they're on two strands. The number of cases with no result and the length of time to investigate. So could I just ask some questions around both those aspects? On the number of cases with no result, it does seem to me that one of the things you need to do is to improve your risk analysis. And the way to do that, I think, and this is a real sort of a question about the way that HMRC works. JP, you've made a great play about employing these extra experienced tax compliance officers. Yep. But I actually wonder whether you want not to be investing more money in IT of digital, so that you can use AI to actually target this huge amount of information that you've been talking about you're going to get, particularly from foreign peoples with non-dom status. This is precisely where AI can look at large amounts of data to see where the trend is off track. And I wonder whether you are investing enough in AI.
Well, I think we would agree exactly with what you've just said. So more capacity, but also improved targeting and risking and optimising the use of digital capabilities to support us in doing that. And that will lead to improved productivity. One of the indicators that we might therefore see shift would be a reduction in those nil cases. However, I don't want the team to overly react to that, because you might then create a risk aversion when they don't take on cases where there is uncertainty. Yes. So, I do want them to be empowered to investigate it, even if it means it might result in a nil outcome, because that's the right thing to do. But absolutely, use of AI, predictive analytics, the way in which we use our risking models and our data. The team can say a bit more about all the work they've already done, but a big part of our SR settlement, Angela referenced it earlier, is about the productivity of our compliance engine and giving it the investment it needs. And we're standing that up now. There's work building on proof of concepts and work already. And I think it's a big opportunity in the years ahead.
So the second question sort of basically follows the first, and this is the length of time to investigate. And I entirely agree with Nessel. The longer it takes to investigate, the more the risk is that people will disappear one way or another. Again, AI will give you a better steer, maybe, than your tax compliance officers, because they will tell you the information that you're missing. And it may enable you to use your letter letters or emails of inquiry to better target the information that you want, even to the extent of alternatives. If this is true, we want this information. If that is true, we want that information, which would shorten the exchange of information and therefore should shorten this length of time taking to investigate.
Let me just bring Penny in. We're having exactly this conversation this morning. We agree. The opportunities from AI are significant. I think the team, though, have been working with risking models which are augmented with digital capabilities for a long time. So there's a foundation and a capability to build on. But Penny,
So certainly over this next few years, we're looking to invest in our risking, in our data, because obviously the risking only works off the data. And certainly, things like the digitisation of the inheritance tax regime, which was announced in autumn budget, is going to be a really helpful thing, because having that data available to us readily and swiftly improves the pace at which we can, feed it into our risking and analytics, things like investment in our case management systems, because that will enable our wealthy caseworkers to get access to the data and information in a more timely and effective way. And certainly we want to look at the use of what people think of as AI, the generative type AI as well, in terms of helping us to maximise our impact. We use a lot of the broader spectrum of AI at the moment, predictive analytics, machine learning and so on, in our risking functions, but our absolute intention over the next few years is to invest and to see a return from that.
Very helpful, thank you. Can I just come back to some of the basic questions, because I agree with Nessel Kazakhstan. On the face of it, figure 10, and looking at the wealthy tax gap, it's hardly shifted. In fact, if anything, it's decreased from the 1.9 figure that we've been talking about in this hearing to 1.7. Yet the compliance yield has gone up from 2.6 to 4.4. Now, I accept very much, Jonathan, what you were saying. Theoretically, one has an action on the other. But I just wonder whether the basic wealthy tax gap is correctly calculated in the first. And this may be too simplistic, I accept, but I'd welcome a view on what I'm about to say. Paragraph 13 makes it perfectly clear that there are £849 billion in offshore accounts at the end of 2019. Now, I assume that probably will have gone up by now, but even if you take a 4% yield on that, that's 33.6 billion. Where the income tax liabilities for 23/4 just so happens to be almost identical at 34 billion. And that's without all the capital gains and stamp duty and everything else. So on the face of it, that very simplistic analysis would suggest that the wealthy tax gap is far too low.
So if I could come in on that. So particularly with the offshore, and we'll probably come onto this when we've looked at the offshore tax gap, we're able to match individual records we get in against the information we hold, and that suggested that actually there was the level of non-compliance in the offshore in regards of, should be very clear, in regards of information we get about those accounts is actually quite low. We were able to match a large proportion of those accounts to correctly filed tax returns. So I think that top level analysis probably will potentially be misleading. You need to look at the individual levels, and then for the, as I said, for the wealthy population as a whole, we will then look at individual taxes or individual behaviours and understand what are the risks with those. So I think that probably is overly simplistic in terms of that. But as I said, I would also be very clear that this is an area that is very difficult. That tax gaps in general are difficult to measure, and tax gaps amongst the wealthy are even a little bit more difficult than the average. So there is a challenge there. But I think if I'm looking at offshore, where we get that information in from overseas, when we've reconciled that against our own records, we've reassured ourselves that a lot, the vast majority of the income related to that is collected, but that's only in regards where we get that overseas information on financial assets.
So if you're going to defend that 1.7 figure of wealthy tax gap, as opposed to the 4.4 figure of compliance, you've got to link the two, and it does suggest, as the report suggests, therefore, that there is an increased level of non-compliance in the system.
There is a potential. Again, you need, as I said, we'll be a bit careful about adding every year the yield and the tax gap, because there are sometimes timing differences between them. But in general, yes, it is indicating that the potential for non-compliance here is actually higher, but we are more successful at collecting more of that potential non-compliance, hence the yield is going up. That would be, I think, the way I would...
Yeah. And the only thing I'd add is coming back to one of Jonathan's earlier points, just the way the tax gap is calculated, some of our work does not count towards it. So if I give an example where somebody will make a claim for repayment, for example, but we reject that because we do not think repayment is due, that will be preventative for future amounts rather than tax gap. So, and I know that ends up sounding rather hypothetical and analytical, but it just means that sometimes it's not comparative of the compliance yield on that year against the tax gap in that year. Yeah. However, we continue to want to work with our analysts, and as we then increase our capacity and find out more about those individuals, that then directly feeds into the level of risk that we ascertain. So it's a continuous process in terms of our understanding.
So putting both together what both of you have said, that there is a theoretical possibility that compliance is getting worse, but you are collecting more tax. Is one of the reasons because the cases are getting more complex, it's taking longer to investigate because they are more complex, and therefore you're rolling over money from one tax year to another, and so there's a lag in these figures.
Yeah, so as I said, there are some challenges, particularly with very large or complex investigations. They may cover a number of years, but they may conclude in one particular year. So we see this with also our large business population, which has some similarities of having quite a small number of people who pay large amounts of tax. So there is a risk here. But as I said, I think it would be more that the potential for non-compliance is higher. But what we are doing through the work across the organisation is actually maintaining a net tax gap, and that's down to the better data and also the hard work of our colleagues on the front line.
Chair, I just wondered, just one sentence, forgive me, it's just we had a good conversation with the NAO about this because we recognise, as Jonathan has said, that the tax gap is an estimate. We are continually iterating the methodology. I've been through it with the team. I think compared to, I think it's global best practice, what the UK does in regards to the tax gap, but that doesn't mean that we shouldn't continue to improve it. And I think we take that challenge. Our analysts are excellent, and they're up for that challenge. So we will continue to iterate it. We will publish the latest iteration of the tax gap shortly. It will continue to move around as the baseline moves around. Our objective, of course, is for the long term to see it reduce.
I think that assurance is very welcome, if I may say so. Lloyd Hatton.
Thank you, Chair. And I just wanted to make sure we didn't forget to talk about this. We've started to touch upon it. But that is the offshore tax gap. Obviously, we've talked about the overall tax gap and the tax gap for the wealthiest individuals. When your predecessor came to this committee not so long ago, we had quite a back and forth about this. And I'd appreciate maybe an update from you, JP, just so we can get an idea about what HMRC's current thinking is. The current estimate that was shared by HMRC to this committee at the last meeting was that the offshore tax gap was just £0.3 billion from 2018-2019. That was the most up-to-date figure that they could provide. I personally feel that this seems like quite an implausible figure, particularly when we consider that HMRC's own common reporting standard outlined that UK taxpayers held £850 billion in foreign accounts in that same year, of which £570 billion was held in tax havens. Of course, there are also stories that hit the press. The infamous Roman Abramovich tax scandal that came up not so long ago suggested that he might have avoided, allegedly, around £0.5 billion in tax, which alone dwarfs the figure that you've given us. So since our last meeting, could you give us any reassurance that your estimates as to what the offshore tax gap is in any way accurate?
Jonathan, just to cover on the analytical side, because his team lead this, and having the previous interim national statistician on your team is a helpful thing. Jonathan, on the method, please. Thanks.
Yeah. So just to clarify, and apologies, I may have fallen down the same trap. What we did with that particular estimate, the 0.3 billion, was the non-compliance relating to automatic exchange of information. So this is where we receive millions of records. For the year in which we did this evaluation, we received 7 million information on 7 million bank accounts or accounts relating to 4 million people who were resident in the UK. And what we did there was an exercise of matching what we had been told from those overseas accounts against what we had on our own records. And where there was a discrepancy, we then did a random inquiry process where we took a sample, I think it was 400 of those cases, and worked them through to see how much was not compliant. And we added that all together, and where we get, for those cases where there is automatic exchange of information, that part of the of assets held offshore, we think that tax gap was 0.3
So do you,
billion.
just to be really, really clear, do you feel the £0.3 billion figure that your predecessor, JP, brought to this committee is in any way a robust estimate of the offshore tax gap, particularly considering HMRC's own common reporting standard points out that UK taxpayers hold £850 billion in foreign accounts? Obviously, I'm not saying that's all part of tax avoidance or evasion.
No.
I'm not making that assessment at all, but you'd like to think that actually it's probably more than 0.3 billion.
What our estimate showed is when we worked that through, we reconciled the information about those offshore accounts with the information we held. The gap at the end, and there are some assumptions in there, we've been very transparent about how we've gone through that method. By the time we did all of that, it was only 0.3 billion left.
It's £570 billion
yes.
held in tax havens,
yes,
in jurisdictions who completely exist to enable people to aggressively avoid and evade tax. And if it's a £570 billion figure of just UK taxpayers, can you really tell us with confidence that that £0.3 billion figure is an accurate estimate of the offshore tax gap?
Yes, when of that particular part of the tax gap related to the common reporting standard and the US equivalent. And as I said, individuals will know that if you hold information offshore, we get that information.
Do you think this is a very effective formula? Do you think it actually is world leading? Do you think it is robust?
Well, I think actually we're the only country to have actually done that reconciliation, as far as I know.
I mean, though, that it's a good...
You might be the only ones, but it doesn't mean it's effective.
We've always been clear it's a partial estimate, so it is not the totality of the offshore tax gap. It's just a partial
So you're
estimate.
accepting that it is partial?
That's what we said in our publication. It's a partial estimate.
It only relates to the information, the common reporting standard, and this reconciles what that offshore information is, all of that information, with what we hold. So this is comparing what the offshore, and the tax havens are telling us this information. They are telling us account by account, individual by individual, how much is held, and that allows us to reconcile it. And as I said, that will have an effect on the behaviour of the individuals. Those individuals will know that simply opening an account in one of those havens is no way of hiding your money.
Yeah.
And so that should actually, we would expect that sort of behaviour, because these people will know that's no longer
surely you can
way.
understand our concern, which is sitting alongside what the common reporting standard sets out. We've seen a litany of offshore tax leaks, such as the Panama Papers and the Pandora's Papers, which expose the scale of tax evasion and aggressive tax avoidance. I know, just for instance, the Panama Papers pointed out that 100 UK resident millionaires were identified as tax dodgers. Of course, those are allegations in leaks, but that's what those leaks set out, and it made clear that they were hiding their wealth in offshore schemes based in tax havens. So with that in mind, with those leaks, with the Abramovich story, with what the common reporting standard seems to suggest, do you really feel that HMRC has the skills, and this is probably one for you, JP, as an incoming chief exec, do you have the skills to have any idea of the scale of the problem and to give us, as a committee and the British public, an estimate of what the offshore tax gap actually is?
Well, look, I think we've tried to set out today all the things we're going to do to increase the capacity and capability of the team to support them in undertaking compliance activity for wealthy customers, including offshore. And that is an important part of increasing yield, which will increase year on year, and closing the tax gap. We don't disagree with your underlying objective, which is ultimately to ensure the taxes that are due get paid. That's our objective.
Rests on you having an accurate figure for what the offshore tax gap is.
Understood. I've had that conversation with the team a lot. I think they've always tried to be transparent, that we've been trying to measure a very complex thing, which only a few other jurisdictions around the world do. We work with the OECD to try and make sure that our work is grounded in best practice. We'll keep doing that, and being clear that it is a partial estimate based on the data that we do have available, and we want to expand the coverage of data available, which will include the confidence of the measure as well. So I think my reassurance to the committee is I'm very happy to continue to come back here and talk about how we're refining the methodology of the tax gap, assuring it as best practice globally, and then risking and targeting additional capacity to bring that tax in wherever it is around the world.
Since your predecessor came here last, the government has agreed with the PAC's recommendation that HMRC should develop a standalone strategy to reduce the offshore tax gap. So I think government ministers also understand the scale of the problem here. So with that in mind, can you illuminate the committee today as to when you will develop this standalone strategy to reduce the offshore tax gap?
So we've accepted that recommendation, and we will set out in writing for the committee our next steps in regards to that. We've covered quite a lot of the nature of the strategy today in terms of the announcements that were made at autumn budget and the spring statements, the consultations that are underway in terms of powers, additional capacity, new capabilities announcement yesterday, and the spending review to invest in our digital capabilities.
Will there be a sort of publication date for the strategy to be put in one place?
So I think if the committee would welcome that, we can draw that all together and then make sure we've played it back to you in writing. We'll obviously need to agree with our ministers what they would like to do in terms of the mode of that publication, whether it's fiscal events, part of annual reports, or a standalone thing. But in terms of transparency, what's the strategy? What's the plan? What will it deliver? We want to be as transparent and as clear as possible on that.
And if the committee would like to see sort of how recently we've set some of this out, we published something at Autumn Budget 2024 that set out our current approach to tackling offshore evasion that is always really worthy of what we're doing right now.
That would be very helpful. Thank you. Lloyd?
And if I can, just 30 seconds. I have constituents living in Barking who are living in properties, paying housing charges, going to a company owned by individuals, living on offshore tax havens.
Yeah.
They're getting ripped off, and then they looked with their charges, and so they really want HMRC to go after individuals who should be paying their fair share of tax, which is why it speaks really to the fairness that every individual in this country wants to feel, and why that figure is so important, because it gives people confidence.
So we
know that panel members understand.
We feel that keenly. Fairness is right at the heart of our charter. We want the vast majority of people pay their taxes on time lawfully. We want to make that as easy as possible and improve our customer service. Angela set out how we'll do that. Our compliance team do a great job of then bringing in additional yield over and above that. They're exceeding their targets. We'll be stretching those targets further and ultimately raising an additional $7.5 billion a year by the end of the period because of all of that. And at the same time, for the residual gap, the tax gap, we want to close that to be as low as possible. We're already forecasting to see it reduce, the OBR based on our announced plans, and we will be working, and we are working flat out with our ministers on options to go further. And we'll say more about that, ministers will say more about that at the autumn budget.
Well done, Nizzle, bringing that to the fore, because it is about the fairness. I don't think anybody could disagree with that. Oliver.
Thank you. Thank you, Chair. In 2017, this committee looked at this issue again, collecting the right amount of tax from high net worth individuals, and looked at specifically examples in Australia and Japan, where high net worth individuals needed to provide information about their assets in their tax returns, which made it easier for them to kind of assess through their kind of risk matrix what they should be trying to go after. We don't do that. Is it something that do you have an appetite for doing that? And in 2017, I think the department told us that this issue is being considered and looked at the time, and has there been any progress on that since 2017?
So obviously that the kind of final policy decision would always be a matter for ministers, but in terms of information, the self-assessment return is one of the ways in which you can collect that information, but we've talked through a number of other ways in which we collect data that has enhanced our understanding and ability to risk the wealthiest individuals, such as some of the international agreements that we've discussed today. The removal of the non-dom regime and the need to then report foreign income and gains will also give us enhanced information that we didn't have before on those individuals for the first time. And as I mentioned, we're getting crypto asset reporting soon, as well as the Register of Overseas Entities. So that combination of data does put us in a significantly enhanced position than from 2017 when this was last discussed at this committee.
When are you getting crypto asset reporting?
2027.
2027. In 2015, HMRC had a plan to enhance reporting from wealthy individuals and trustees. From what I understand, it never passed the draft consultation stage at that point. Should that decision not to consult about enhanced reporting from wealthy individuals be revisited in light of all the changes that have been made since 2015?
We will discuss that policy with ministers in terms of what, it would always be part of our thinking in terms of a range of options that we might deploy to tackle this risk. What I would say, though, is that it has significantly shifted in that time. So you mentioned trustees. That's now part of the Common Reporting Standard in the Register of Overseas Entities. And in fact, we're making improvements to both of those to think about things like joint accounts and also get more information on controlling persons. So that's already in hand. So I think there's a mixture of ways in which you can look at this. What people tell us is one of them, but actually what we found is really effective is that automatic exchange of information and getting that right, because of course what people tell us is more of a matter of choice, whereas what we get automatically we can rely on factually from the jurisdictions that send it.
I completely agree with you, and it might be a question for yourself or for Penny. Where are your biggest gaps in terms of information collection at the moment? And for example, there's the NAO report mentions HMRC receiving data on UK accounts saving interest, but it's quite limited, and something like 1 in 5 of those of that data can't be attributed to an HMRC account. So some of this isn't as kind of clean as saying that's this person's and this is that person's. Are there some areas that are of higher complexity? Because reading some of this, it feels like you need loads more information, and you probably like more information. Do you feel like you're flying a bit blind in some areas?
I wouldn't use that phrase. What I would say is that we do get a lot of information and data, but the risking and analytics that we were discussing previously is so important, because data alone will not help us pinpoint an individual. If someone is determined to set up complex trusts or structures, we then need to follow that through. So we may get, for example, information that there's a limited company based in the UK. We then need to work with Companies House to identify who owns that company, where do the income and gains from that company actually flow through to. And that's why investigative work alongside risking and analytics is so important. In terms of gaps, though, we are working, as I mentioned, to improve the information we get on controlling persons so that we can more easily identify the beneficial owners. So that's with the OECD at the moment. We're also looking at bringing in e-money. I mentioned crypto, but e-money in general. Joint accounts has been another area where we didn't get as much information as we'd like, so we're bringing that in. And then the OECD are also thinking about real estate data, because property transactions are another area where we'd like to know more about it. So ultimately, it's an evolving picture. We'd love to see more transactional data, for example, because we get account balances under the CRS, but not transactions. But that is all something that we need to agree internationally, because us doing it unilaterally won't get us the information that we need.
This is probably to John Paul, but the reference to that 2015 report, and I realise the world has changed quite significantly. I think something like a data year is about 2 months, so it can feel like decades since 2015, I accept that. But is there a piece of work going on for a bigger consultation on this, and is there a timescale for that piece of work? So I accept that there are gaps that you can identify, and there's clearly ambition there. But what we like at this committee is a deadline and an ambition and a timescale. And a report that we can then scrutinise at a later point.
There's two angles to this. There's certainly within the UK issue, when you mentioned bank account we've got a consultation outstanding on improving the quality of data we get around UK bank accounts to address that, as you say, that 1/5 of the accounts we struggle to reconcile. So that consultation is ongoing. We've also got a similar, in the same consultation, we're also talking about dividend income, because again, we would like this. And these, if we can get these right, yes, it helps compliance, but it also helps customers as well, because if we can get that information automatically, put it into their tax affairs, they don't need to tell us. So actually, there's some real benefits there, actually, from that domestic exchange. So those will have really clear deadlines. Now, obviously, we need to consult, obviously, the banks and the financial institutions will have a view on how far and how fast we can move in that regard. And Philippa also alighted on where we are working internationally to either elaborate, as I said, the common reporting standard. That's great, that has been a real game changer, but where do we make that more sophisticated? Crypto assets reporting, we have got a deadline for that, but some of those other things will require multilateral negotiations, so that's not necessarily solely within our control, but the direction of travel and what we are looking to do is fill in exactly those gaps that Philippa was saying. So there's a number of aspects to data, some of it within our own control, some of it, and again, we can therefore set more of the timetable, but I would caution that in some of this, it will require multilateral negotiation, and that can take some time.
Just on your point around transparency and accountability, I totally agree, and I think we'll roll that into that previous action. So how much of that, where we've got consultations live, we've got commitments, we've got dates, we can share that, so you're clear and you can hold us to account on all of that. But also, just to reinforce your point, the appetite is very high, and the encouragement and support from ministers to pursue this and fill those gaps in and optimise the enabling environment to improve our performance is good. So I think where there are ideas and opportunities, we want to take them as quickly as possible, because we want to close the tax gap.
Okay, thank you.
Just a few factual mopping up questions, so short questions because we've been going a long time. Paragraph 3.9, your recruitment of extra staff. That paragraph tells us you recruited, or you aim to recruit 5,500 more compliance staff, but HMRC has not yet determined how many of these will be assigned to the wealthy team. Further down, it says HMRC plans to increase the number of people tackling wealthy offshore non-compliance by around 400 people in the next 5 years. So of that 5,500, it's 400 going to the wealthy.
Yeah.
Yeah. Okay.
We've recruited over 500 already, so we're on track. But it's a mountain to climb. I've done this before in Jobs in a Plus. We brought in 13,500 work coaches in 6 months. So you can do this, but it is a big undertaking. So far, so good. But, Penny, do you want to?
To deal with these more complex cases, you're going to need more better trained people.
Yes.
Are you training them up yourself, or are you aiming to recruit more experienced people?
So our plan for recruitment involves taking an additional roughly 1,000 people a year, broadly split between our compliance foundation training and our tax specialist programme, although we take around 280 tax specialist graduates every year. We're upping that to around 500. The remainder will be in our foundation level programmes. But as part of that recruitment, we're also looking to bring in more external experienced tax specialists. We brought in over 40 last year, and we'll continue to search for the people with the right experience and expertise to help teams like Philippa's or our large business colleagues. We do, however, know that we need experience in the wealthy teams, and so what we'll be doing is really rolling experienced people into those teams to support the work that Philippa does, whilst we're bringing new people in and training them. We bring them over several years because they have an intensive classroom period of learning of around 9 months, and then they are out in operational teams being coached and mentored, and that's quite a intensive process. So we can't bring them all in all at once without cannibalising the normal compliance work that we would be doing to an extent that isn't helpful. So it's a graduated process of recruitment.
Is your recruitment package attractive enough to be able to recruit skilled people from the private sector?
Certainly, we've been impressed by, we've started, as I say, looking for those external experienced people, and I think so far we've exceeded our expectations. So we continue to look at what will attract people, experiment with new ways of attracting and recruiting people and retaining them. But so far, I think it's working.
When will this committee be able to see the results in terms of increased compliance from those people you've recruited?
So the people that we recruit at foundation and tax specialist level, we have an assumption-based model, which is how the OBR score the additional yield. And that will come in over the next few years, and it's the sort of summary numbers on that are in the Red Book. As regards the people who join who are expert, it's quite difficult to point to particular amounts of yield related to that, but they will be part of that strategy for increasing our focus on the wealthy.
How much are you expecting the wealthy team to contribute towards the government's aim of raising 7.5 billion in additional tax revenue by the year 29-30?
As we've said, those additional 400 people who are coming in to tackle particularly the wealthy offshore side are expected to bring in at least £500 million.
Yes. All right. Okay, that's very helpful. I'd just like to move on final sort of category of questions, and that's penalties and prosecutions. If I could take you to paragraph 3.17. In 23-4, you issued 456 penalties, but that was down from 1,747 in 22-3 and down further from 2,153 in 2018-19. This is a considerable drop. Is there a policy reason for this?
No, it's really dependent on the mixture of the work we do in the particular circumstances of the caseload. Penalties can vary depending on the type of case that we are looking at. And so, I don't know, Philippa, do you want to add anything?
I do. So in essence, we charge the penalties in accordance with the legislation. Behavioural penalties, which is what these were talking about, as opposed to automatic penalties where someone's late with their filing, varies in accordance with both the tax lost and the behaviours presented. So if someone makes a mistake but has taken reasonable care, despite taking reasonable care, they will not get charged a penalty. Whereas if we find they are careless or deliberate in their behaviour, then they will. I think it's important, though, that has really fluctuated over the years. So yes, 23-24 was 5%, but it's been as high as 22% in other years. And it really does vary. And some of the work we do does not attract behavioural penalties. So it's just highly dependent on the nature of the risk. But where we find those behaviours, we will charge those penalties.
And just to add, Chair, if I may, we expect this to go up. So we are expecting about a 20% increase in the cases that lead to prosecution, and therefore we think prosecutions will rise in the years ahead.
You almost read my mind, because that's where I was going to next, was prosecutions. HMRC's work to tackle fraud makes use of its civil powers, so I'm wondering whether you've got sufficient powers in there. This is paragraph 18. The paragraph goes on to say HMRC's policies reduce the number of overall prosecutions in order to focus on high-value, high-harm fraud, while also facing delays in the criminal justice system. It then makes a fairly sort of devastating statement, which says HMR does not fully understand the deterrent effect of prosecutions, but is undertaking analysis to improve its understanding. I mean, that's a fairly sort of damning statement, really. I think if you don't know what the effect of prosecutions is on deterrent by now, when will you?
Yeah. Well, I think Jonathan might just say a bit on the analysis and the evaluation, because I think what the sentence is alluding to is the sort of quantification, with a level of certainty of the deterrent effect. But let's be clear, we think it matters, and we are committed to increasing those cases in terms of expanding counter-fraud capability. So our annual charging decisions on the most harmful fraud will increase by 20%, from 500 to 600 per year by 29-30, and that will increase prosecutions. So the message we've been trying to get over today about capacity, capability, taking on the most complex cases, and ensuring that where they need to indeed lead to prosecution, we will do that, and increasingly so, is part of our response to the fact that we agree the deterrent effect matters. Whether you can quantify with precision The effect of the deterrent effects is, I think, a difficult analytical question that Jonathan will have a good answer to.
Yeah, so we have looked internationally and also within the UK context as to can we quantify, and is that quantify? If you read somebody has been prosecuted for tax evasion, how much more likely are you to be compliant? Can we put a pound and pence figure on that? That is the challenge. What we have been able to do is look at the sort of ways in which deterrence works. And that reinforces actually the model we have, where we find deterrence works primarily through sort of things like media and social media. And actually, the more severe the penalty, the more newsworthy it is, and therefore the more people are aware of it. And so focusing therefore on the most severe cases, which are therefore likely to attract the most severe penalties, is actually, we think, the most likely way in which deterrence will flow through the economy. So that's the rationale. But can I give you a pound and pence figure on how much extra compliance we have from that? I'm afraid that's where the analysis and the evidence runs out.
Right. Lloyd, very quickly to finish.
Yes, of course.
We are well overdue.
Yes, we are. But the Chair raises a really important point here, and following our session with your predecessor, JP, the government agreed with this committee's recommendation that HMRC research which interventions are most effective in achieving that strong deterrent effect for tax evaders and for criminals, other organised criminals. So what progress has actually been made since we last had a session with HMRC in understanding which interventions, whether that's a civil penalty versus a criminal prosecution, is truly the most effective deterrent? I mean, that single case that brought in £2.5 billion of compliance yield, what was the value of the penalties associated with that case? Because I think it would be useful for us to know when actually a penalty is most effective or actually a prosecution.
Well, as I said, in terms of the deterrent effect, we've looked at exactly as I said. The evidence is that the more severe penalty, more severe the sanction, whether that's a custodial sentence or anything else, is more likely to drive newsworthiness and therefore have a deterrent effect. But actually, in terms of our overall, I think what you're hinting at is probably a more overall approach as to kind of our overall approach to compliance, which is multifaceted, not just relying on prosecutions, but again, it's about, can we stop it arising, and then can we deal with effectively compliance when we find it, using civil and criminal penalties. Okay.
Just one very final question, if that's the right, Chair, just to park this issue. In 2023-24, HMRC only prosecuted 25 wealthy taxpayers as set out in the NA report. I'm concerned that does undermine the rule of law if offences were not pursued in the courts, and that there is a serious risk that some super very wealthy individuals in this country will think that you can get away with not paying your taxes. So how effective is our tax evasion deterrent if you have only prosecuted 25 wealthy taxpayers in 23-24?
Well, in terms of the stats that I've got available, in terms of at the end of 23-24, as you say, HMRC had 399 wealthy individuals under criminal investigation, secured 47 charging decisions in relation to wealthy individuals, and that returned to that pre-pandemic level, so an improvement. I've set out what we're doing to increase capacity and capability to go further, including an increase in 20% of
would only get you to 30 prosecutions, though, wouldn't it?
Well, that's right. So not every case leads to prosecution, but the success rate is quite good. But I agree with your point. We want to do more of these cases, and we want to see prosecutions rise, and that will increase the deterrent effect, and that's the plan.
Right, we're going to have to call it a halt there because we're in danger of losing a forum. So can I thank our witnesses very, very much indeed. We've covered a pretty broad field today. You've answered with candour and a depth of knowledge, so I'm very grateful, JP, to you and your team. An uncorrected transcript of this hearing will be published on the committee's website in the coming days. The committee will consider the evidence that you've provided and will produce a report with recommendations in due course. Order.